Governance. Quickly, I request Chairman WIRC CA Arpit Kabra, Secretary WIRC CA Saurabh Azmera, Treasurer WIRC CA Ketan Sayya to please join us on dais. So this program is organized by Corporate Law and Corporate Governance Committee of ICAI. We are thankful to CA Sri Priya Kumar, Chairperson of committee, and CA Durgesh Kabra, Chairperson of Vice Chairperson of this committee. Now, quickly, I request everyone to kindly rise for ICAI motto.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you. So we start all our conferences by lighting the auspicious lamp. So now I request everyone to kindly join us for lighting the lamp. Sir, Sandeep sir, all the regional council members, CA Murtaja Kachwala, CA Shweta Jain, and CA Pinky Kedia, and all the volunteers also. So once again, welcome to this conference. It's an honor to have you all here today to discuss the latest trends and developments in corporate governance and company law. The importance of area of this law cannot be overstated, and I hope that by the end of this conference, you will leave feeling informed, inspired, and equipped to navigate the ever-changing landscape of corporate governance. Uh, so without taking much of time, let me provide some more information about what we have planned you for this conference. So we will start with the schedule 3 and relevant updates. Then we will be having fraud risk red flags. We will be having an open house session in the end on Q&A, and we will be having different panel discussions on a relevant topic of corporate governance. So this is about the conference with the through of mix of keynote addresses, question and answer sessions, and eminent speakers. I am sure we all will be taking a great learning home, and you feel much more informed and equipped once we leave from this conference. As rightly said, that good governance is essential to the success of any company. Doesn't matter how small and how big it is. It's about ensuring that all the decisions are made with integrity, transparency, and accountability. With this, I welcome you all once again. And now it's time to hear from our chairman. So I invite our chairman of WIRC, CA Arpit Kabra, for his address. Sir.
Good morning, everyone. A very, very warm morning to each one of you. It's hot outside, it will be, but yes, it will be warm here because of the kind of energy that we'll all exhibit today. It's a great feeling for me. It's a very humbling feeling for me. These were the places that we've started, by coming to programs of WIRC, by coming to programs of our study circle, the one which is nearby Borivali Kandivali East. There is Borivali Central, there is Borivali West, Mahavir Nagar, and Borivali, small little programs that we keep on hosting here and there. And we were always a part of that. Maybe 5 years down the line that we were doing it. And now coming from there to here, as a chairman of this region, I think I really feel honored and humbled. And believe me, when I'm here speaking to you, all of you today, it really feels me, it really makes me feel really wonderful today, hosting this program here. And given the density of this area from say Malad to Mira Road, I think highest in India, the highest amount of chartered accountants that you find is here. So therefore, it is must that WIRC would do some programs here, and therefore this year most of us at the council have also decided we should do some large programs here. And therefore, please stay on with us. We'll be doing many conferences, and if you wish there should be something that you want a bigger one over here or a particular topic, please feel free to reach out to us. Today's session, this is a typical mandate, bank audits, then the company law, and then, we go on, we're doing some forensics, we do some internal audits, all of this. But it's a refreshing change because this time, now you have various regulators getting into action. Audits would be getting into place. This time audits will be a little bit more tougher is what I believe. With the kind of actions that we're hearing with different regulators talking about the quality of audits. Yesterday, the president, Honorable President C. Aniket Ji Talati has given a wonderful interview at Zee Business, wherein he has spoken about zero tolerance towards the quality of our audits. The kind of learnings we do, the kind of programs we do, the kind of trainings we do, I think it is a good way that, if there is a higher amount of scrutiny that is happening on the work, it will result into one thing, more focused work, and therefore larger, higher the fees. I think for us, this work was largely taken as more of a tick the box, but yes, with more surveillance, more scrutiny, I think this would become much more of eminent importance. A very, very big statement that the president made was a chartered accountant as an auditor is not expected to check each and every this. We have to give a reasonable assurance. I think coming from that background, when we talk about a reasonable assurance for any of our clients, for any of our companies or corporations or whatever, believe me, with social audits around the corner, this would become of a huge importance. Although given by a statute, but yes, there will be a lot that would be required. The kind of balance sheets we'll see now will undergo a huge change because of
most importantly, social audits, ESG, and then the entire policy of profits being the last now. This entire conference, I'm really thankful to the committee, the corporate laws and corporate governance committee. Shri Priya madam, she was kind enough. She had to travel urgently, otherwise she would have been here with us, and she would join us maybe through virtual mode and address us. And the vice chair Durgesh, I think he would be here with us tomorrow. He would like to spend some time, because he handles one of the very important model called as AQMM, the audit quality maturity model. I think for us, all of us, if peer review is something which is of importance, which shows the power of documentation for each one of us, and in a wake of some actions by a regulator, the power of documentation has become of immense importance. So much so that there is a genre of chartered accountants who have started their new line of business, their new line of practice, their new line of consulting, only and only in documenting right. And believe me, if we were told that Big Fours are the ones who are doing the documentation right, I think their largest customers are Big Fours only, because the actions are there and these people are working. And per assignment, the fees would range anywhere around 50 to 60 lakh rupees, purely on documentation. It's a good networking forum, and probably we can all discuss about these during when we interact, when we chat. But yes, this is one of the opportunities. So peer review becomes therefore important. And just like a peer review becomes important, AQMM becomes much more important now. I think that would all set in, that would all kick in a small little time frame. The interesting part of this conference is at the end, we have kept a networking session, a Q&A session. And this year in the council, we are all aligned towards the thought that, whatever we do, we need to have a good networking forum. We need to have and ensure that we know each other well. Probably most of you would come here, you would know. So those who are sitting, this workshop, this entire conference has been largely assigned in a workshop. So you are sharing table spaces in a round table conference. That is for a purpose. Probably you'll interact more, probably you'll make more new friends, new acquaintances, and then go back. Usually in these conferences, we hardly know 5 or 10 people. I would request all of you to please interact and meet at least with around 25, 30 new people, because, probably our learnings, if shared, would be much better. I must really thank Gautam Lad for, doing this. He's chairing the committee in the Western India Regional Council. So thanks, Gautam, for setting this up. I think he was the one who found out all these topics, speakers, and Sandeep bhai, really thankful to you. At a very short notice, you agreed to be a part of this conference. So really, please put your hands together for our faculty, Sandeep Shah sir. Really helpful, thankful to Saurabh and Ketan bhai, Pinky madam for doing this up. Murtuza bhai is here, regional council member, last immediate past chairman. Murtuza bhai, thanks for setting this up in a wonderful way, because he comes from an internal audit background, and believe me, this conference will be also having a flavor of internal audit expectations. The panel which is coming in the next day, first session next day morning, would talk about the expectations of independent directors. Of course, their jobs are all in line now. They have a huge liability, but yes, they are heavily dependent on auditors as a role. So I think Murtuza bhai has done a wonderful job there. So thank you, Murtuza bhai. Shweta madam here, of course, and all the wonderful conveners of the study circles. I think without them, this conference would not have been possible. So thank you, all of you. And they would be here. So Lalit bhai is here. So I think thanks, Lalit bhai. There'll be others who will be joining, and we'll recognize them also on the way. Networking is a key. Therefore, we've started a small little helpline called as at an email ID, and our newsletters this year, if you will see, they have gone a total change. We have started a zone called as a networking zone. Now in this zone, you will find people who are looking out for partners, people who are looking out for new setups, people who are looking out for some experts, some based for some, say, particular engagement. If you need a pharma expert, so there will be one requirement for a pharma expert, there will be one requirement for a banking expert, one for another expert. So all of these, so I think we just launched it, and we've got more than around 100 plus networking requirements. We've all clubbed it, verified it, and therefore we have hosted some of them. So around 15, 20 are already hosted now in the newsletter. We want to grow this more and more. It's a simple thing. You need to reach out to us at wirc.connect@ici.in. Give us your requirements. We'll list it. And if you are hooked on that space, you can find out, you can call them and interact with them and do this much more often. So therefore, these are small little areas that we are working on. We'd love to hear from each one of you. This conference would definitely give you an insight about whatever that is happening in this company law perspective. But more importantly, keep a tab on what's happening on the newer fronts. What are the new opportunities that are coming in? And more robust is our audit mechanism. More and more focused people are on this audit mechanism. I think we'll have a good share in terms of our fees. Everything has risen. Yesterday, we were with the Honorable President and Vice President. We were talking only one thing. Everything in this country has risen. All the prices, everything. But only one thing that has remained the same or probably has gone down is our conference fees. So I think that is the commitment that we all have towards our members, our education. One thing that is important is we have to reach out to as many people as possible and ensure that we all arise in this entire new post-COVID, post-World Congress kind of an event as a chartered accountant show our progress. So with these words, thank you very much and have a great learning session. Thank you.
Thank you, Chairman sir, for your kind word of wisdom. Now I request CA Saurabh Azmera, Secretary WRC, to kindly conclude the inaugural session. Saurabh.
Good morning, one and all. So this is starting of our session, so please little louder. Good morning. On the dais, Chairman of WRC, CA Arpit Kabra ji, Treasurer Ketan Sayya ji, and the Committee Chairman Corporate Law, CA Gautam Bhai. Friends, before going to vote of thanks, I like to highlight some of the part which we are doing at WRC. As Chairman sir already addressed. Friends, we are organizing sectorial series for various aspects. Recently, we have completed our sectorial series for GST in relearning. And we have also organized one program for insurance audit. So because our expectation of stakeholders is very high and we have to increase the quality of our deliverables. So we are regularly empowering our members at WRC through various programs. And this series, we are also organizing one startup conclave at Geo World Center in June. 26 June to 28 June will be a big conference for startup under the able leadership of Dheeraj Khandelwal ji in Center Committee, where we will discuss about the exhibitions, investor pitching, and everything will be there for 3 days for startup and MSME also. So I like to suggest, please keep participating in all activities of the WRC to empower the knowledge and to increase our deliverables in terms of quality. I also like to compliment Gautam Bhai for wonderful structure of the program in which audit trail, Caro, everything is available as we are heading towards the audit session. And moving towards the vote of thanks, I extend my vote of thanks to the chairman of the committee, Corporate Law and Corporate Governance Committee, ICI, Chairperson Sri Priya Madam, and Vice Chairperson Sri Durgesh Kabra ji, to allowing us to host this program today at here. Let's have a big round of applause for them in absentia. They will join very soon virtually with us. And I also like to highlight that this year we have very innovative chairman with us who want to promote networking, who want to innovate each and every process at WRC. So let's have a big round of applause. The young and dynamic and energetic chairman, CA Arpit Kabra ji. And it's my great privilege and proud feeling to propose well-deserved vote of thanks to each one of you for making this program successfully. Let's have a big round of applause for each one of you. Because of you, today we are here in this program. Thank you, each one of you. Thank you.
Thank you, Saurabh. Now I hand over MOC to CA Ketan Sayya, Treasurer WRC, for further session. Ketan bhai.
I'll request Regional Council member and my colleague in Council, Pinky Madam, to escort our learned speaker, Sandeep bhai, to the dais. The topic of the first session is Schedule 3. In fact, me, Gautam, Arpit, when we were talking about, the structure of this program and to have some good speaker, the first name which came to our mind was Sandeep sir. And when we requested him, he readily agreed. Sir, really thankful to you for such a wonderful support to WIRC. Those who have been practicing in company law or in audit, stat audit, they know that even when it was Schedule 6, we had so many small requirement, and a lot of time when we used to see the financial statement and find that the members are not doing reporting of those, be it, the name of valuer, the number of, the method used for the revaluation. So small requirements are there in Schedule 6, and similarly, those requirements are there in Schedule 3. I was talking to one more colleague in council who does, the SMA listing, Ankit Rathi. And Ankit was saying that, my experience is that many a time when I'm receiving corporate balance sheet, I see that they are not even aware of Schedule 3 formats. There are many balance sheets which are still going in the old format, or the requirement of Schedule 3 is not being met. What is the difference between past and current is the MCA has become more stricter. We have seen some cases where there are companies are penalized, chartered accountants are penalized for not following the Schedule 3. So I think very important topic, the basic topic. I think most of us must be doing some or other private limited companies audit. So to relearn the Schedule 3 to, before we start this year's audit season is one of the important topic. In fact, I'm looking at Sandeep sir's CV or profile first time, but I know him for years, a very ethical professional, very down to earth, humble. If I have to, find some good Indian CA firm, NHI is one of them, and where he's acting as a very senior partner, mentor, and very active person. Let me go through the formal profile. Sandeep Shah is a chartered accountant and managing partner at NHI Associate LLP. He has been into the practice for almost 4 decades. He is engaged with the ICAI into the several, in his role in his support to the ICAI in several ways. And he has been part of the research committee of the ICAI Award for Excellence in Financial Reporting. He has been there on the panel of the technical reviewer formed by FRRB. In the past, he has been associated in the ICAI's Expert Advisory Committee, Accounting Standard Board, Auditing and Assurance Standard Board, IND AS Implementation Committee, IND AS Technical Felicitation Group, many other group, and the guidance notes. He has been part of the committee of Bombay Chartered Accountant Society, into the Auditing and Assurance Committee, Corporate Law and Allied Law Committee. Currently, he is the executive board for not-for-profit organization like National Burn Centers, the financial committee members of the Maharashtra National Law University, Somaya Education Trust, the Council for the Fair Business Practices, Rotary. So as I said, sir is, a very active professional and very down-to-earth personality, expert on auditing assurance in IND AS. And really thankful to you, sir. And I request all of you to carry it with the loud round of applause. We welcome you, sir. With this, I'll request Chairman WIRC, C. Arpit Kabra, to welcome Sandeep sir with a memento as a mark of our love and affection towards him. Sandeep sir, dais is yours. Please take.
Thank you and good morning to all. I'm mindful of the fact that we end at 11:30. We have a lot of senior professionals in the audience. So what we're going to do is that while I have 55 slides, but we'll try and use this more as a refresher for the benefit of the members, this being the opening remarks. And of course, the first session of the evening. And as professionals, we will be fully respectful to the next speaker who comes in time so that you all have a complete flavor of the two-day conference. And the topic given to me is Schedule 3 and relevant updates. This was something which I'm sure each one of you all are, talking at the back of your mind. And I have my friend and colleague who was talking about ChatGPT and then said, okay, what is documented? Whether is it really done? First, we were concerned about whether did you document. Now, what you document with the help of ChatGPT, have you actually done or not? So I was wondering that, whether this national conference is in the format, and I do appreciate the chairman's viewpoint that while we will have a balance between the professional enrichment, but networking is also going to happen. I said, shall we become redundant? So I said, let me quickly see when the topic was given to me that whether recent updates on the amendment to Schedule 3, and this is what ChatGPT had to say. As an AI language model, I don't have access to real-time updates or news. However, I can provide you with the latest information available as of my knowledge cutoff date of September 2021. So, we are in April 23, and this is what you have. And then the question is that if this is what is going to be an answer on your recent updates, then what can I do? I mean, like running across the time, trying to look for the answer. And welcome to the National Conference on Company Law. I think all of us must compliment the entire organizing committee for getting our knowledge update and beating ChatGPT as a part. Thank you, Saurabhji, and congratulations to the entire. So quickly coming to the structure, what I've tried to do is to look at because obviously it's a second year since last year's the amendments have come in and no significant changes have happened to the Schedule 3 amendments which came in last year. So I'm trying to look for what additional material we have during the course of the last 12 months and then probably use that as an refresher. Of course, we know and every day we realize that there is an enhanced responsibility on the company auditor. And that it's not only about the signing partner. I think the responsibility is happening from the top down or bottom up, whichever way we look at it. We are speaking about professional responsibility, but I think by the same breadth, each one of us as principals, it is important for us to be able to reinforce to the articles that it is also their work, which is going to be extremely important for the principals to be able to discharge the responsibility. I think that is one part of the aspect which I would like to certainly reinforce. Of course, there is extensive disclosures, and I must tell you why some of these are becoming important is because along with the MCA, we know that the XML tool is something now which is available to the MCA on a given basis now, because it's been more than 5 years, and therefore the data mining which is available at the MCA level of what filings are happening, what we think can actually escape the eyes of a normal person who has to review thousands and thousands of the filings. Now these are all matters of seconds. So that is one part which I would want to say. Of course, you have the reporting, you have the comparatives for all disclosures. Obviously, there is an updated IT infrastructure and the robust systems and processes. Now, each of these are going to be important for us to be able to discharge our responsibility. Of course, these changes are happening with a view to give the stakeholders the confidence on the transparency, to the investors, the confidence. And when I'm talking about investors, I don't really talk about, only public listed entities. It is going to be important that the world over, and in India, it is also a fact of life that the privately held enterprises generate more business than probably all listed entities. So by market capitalization and all of those, the big companies are there. But as far as the volumes of business is concerned, world over, privately held companies do a lot of work. And therefore, when we talk of investor confidence, we're talking about the owner, the JV partners, the family owners who today may not be in business, but who are, equally concerned with the, whether it's a partnership firm, whether it is an LLP, whether it's a private limited company, each of them are an important stakeholder, because it is through the quality financials is where they continue to derive value, and not necessarily what happens only on a listed space. And that's the satisfaction, and of course the accountability and early warning signs. Now that's a couple of things with which we believe the MCA and the institute is moving. So quickly looking at, some of the aspects on the amendments, and then what has got the regulators have picked up. And I thought I would want to share maybe the next 12, 13 slides. For a lot of professionals, each one of us, this may be, kind of a no-brainer. But the reality of life is that if the regulators and FRR be included, if they're finding these errors, for sure somebody's sleeping. Somebody is not paying as meticulous attention as one should be. And I've always come back and, I had this doctor friend who's extremely, possessive about the fact that anybody in their department, including the accountants, the mobile phones have to be deposited back. And I asked him, why would you do that? He says, if I start picking up a mobile phone, if I'm, doing your eye surgery, would you be really tolerant? And the question therefore is flowing to the point that whether the alertness is not with to please a regulator. I think the alertness is for our own satisfaction, for our own, confidence, our own legacy, which we hand over to our juniors. And therefore, I would always want to look at that each of what we find in the public domain, we must use it correctly for the purposes of understanding that where is the, why is it happening? And what do we do to correct it? And I'm sure each of these conferences are always a matter of fresh learning. It is a matter of reinforcing that, we have responsibility for ourselves to begin with. Of course, we are responsible to the external, but more importantly, we owe responsibility to ourselves. So what we have, of course, there is no dearth of professional material because each of the committees of our institute are doing extremely hard work in trying to put, and every time there is a new guidance, a new schedule, you will have the professionals from various quarters leaving their work aside, putting together and coming and delivering at least a starting point of document for each one of us. And therefore you have the guidance note for the Division 1, Division 2, and Division 3. We have the illustrative formats. You have the various terminologies used in the aspect of first time when it came in. You have the formulas which are for the computation of the ratios, and of course, the clarity as to what needs to be done if you are having the console. And now we know that most of the practitioners, because you may not have a subsidiary, you may have an associate, you have a joint venture, and a console accounts are done. And then the question is, what are the clarity on Schedule 3 at the standalone level and at the console level? So obviously what Schedule 3 did was it improved the transparency and usefulness, the close group related transactions, the control on fund movement, compliance with laws, and other changes. That's what broadly the last year Schedule 3 did. Just to say, it obviously started giving you, and I was looking at one of the published company on an MSME interest, last year they paid 71 crores. That's a section 22 disclosure. This year they paid 33 crores of interest on the MSME delays beyond the If there is a scheduled agreement, then you have 45 days. In absence of any agreement, it is 15 days. Now, can you believe that if this is the level of information which is available to the MSME holders, that if one of the companies can discharge this kind of interest liability, are they being shortchanged by somebody else or not? So of course, the trade payables aging. So we may think it's just one more information, but you see from the dimension of the suppliers of goods and services to these industries, and they're trying to understand that what is the philosophy behind which the working capital management is happening. So idea is not just, this is not merely a a real exercise in rhetorical. There is depth provided we are able to use it. Similarly, you have the aging on the receivables, the capital work in progress. They want to know, every big corporate starts in a big earnest. They open up multiple projects. You open up PSU's balance sheets and you will find 75,000 crores, 1 lakh crores of, capital work in progress, because these are mega projects, and some of them are stalled for want of environment. Sometimes they're stalled for want of the resettlement, for whatever. But there is a lot of information, and it gives you a lot of insights into what's happening in the economy and the country at large. And then you have, of course, the title deeds of the more property, which obviously helps the bankers and the lenders. And of course, it becomes a kind of a recheck for the owners to come back and say whether things are in place or not in place. And, incidentally, I can tell you this, we were looking into one of the, and this I was not from as an auditor, but as in my capacity as the trustees of one of the large trust, which had a lot of immovable properties. And I was surprised, without doing anything, 7/12 of 2021 and 7/12 of 2022, there was a change. And so therefore there is some smart cookie playing somewhere who's able to, make a change on the government records where you had not authorized it. And so therefore, I think some of these are going to be important. If we get it right, I think, these are important tools for the purposes of revalidation, that what is there in your backyard, whether do you actually have it or somebody has actually taken it off. And of course, the revaluation, the fair value and the financial ratios. And of course, each of this has its own meaningful aspect. Just because there were some 17, 18 changes, so I thought that, we'll not go through 100% of that, but just as a part of the overall, and what you see are the 2 tick marks, and therefore what you see if in the CFS, which is in material, of course, it does not apply, because in any event in CFS, the aspect of the promoters, the trade payables, the aging, the trade receivables, the revaluation, the loans and advances of additional disclosure, this will apply both at the SFS level and at the console level. You had the Binami property, the willful defaulter, the transaction with the stock of companies. I mean, there was somebody was mentioning about the businesses being made last year when this disclosure came in. Quickly, a couple of chartered accountants got together and they came back and said that how can I provide a listing of the software companies, because you can't actually punch through one company into the MCA website, because then your time for audit would have already gone. So somebody obviously found out the opportunity to come back and say that, okay, you give me your list and I will tell you whether each of this, and not only that, whether they were struck off then, but on a real-time basis for a fee, they would come back and say that whether have they got restored or not. Because one of the challenges what is happening is that many companies today are using the public documents for the purposes of saying that whether is my company name still appearing as because it is not just about the how many companies, it's the name of the company. So for any reason, let's say for a reason, your company at the ROC level got stuck off where it had to be restored. And if the company actually got restored and it continued in the next year also to come back and say, I'm continuing to do business with your company, which is a stuck off, which is not a reality of life. Because it's not that these companies have got liquidated. There is a difference between a company which is struck off versus a company which is liquidated, which you may not be able to restore back. A struck off company can come back. So one of the aspects, please do not use your March 22 name of the companies without validating that, oh, it was struck off last year and therefore I don't need to check your position. So that validation on not only as of 31st of March, but validation of the sign off date is going to be important, because somebody is going to sue the companies for wrong disclosure. Because if I have drawn something in April and balance sheets are signed in September, the diligence requirement will say that on the day of also signing, whether was there a stock off or not, or reasonably 5-7 days. And then of course you have the compliance with the number of layers and pertaining to undisclosed income. This is a topic by itself. There's a lot of material which is written around it, that how does the companies handle the undisclosed aspect. On the aspect now, what you will see is that we have the half circle under the CFS, and then we have the tick mark on the CFS if material, because what it says is that your CWIP aging, while it is mandatory for SFS, but is not mandatory for CFS unless the CFS at the CFS level itself, the whole thing is material. So, it is not just an accumulation of all the SFS balance sheets into a CFS, but you'll have to also understand that whether from the standalone, if there was a reporting under standalone, but at the CFS level, if it was not a material item, you don't necessarily have to reproduce these items. So these are, our work papers, our check papers are going to be little important for us. Somebody may come back and say, is heavens going to fall? For the purposes of, if I was to, give this information, the answer is no, heavens are going to fall, but is the client going to pay you for these additional efforts? Answer is going to be no. So many a times, it is important for us to also know that in our zeal, many times that we say, kya farak padta hai? Time is the only inventory we as professionals have. I think let's be very, very clear. We have nothing else to sell except for our time. You have the intangible assets under development. You have this security of the current assets. And then compliance with the approved schemes of the arrangements, because you may have a inconsequential arrangement, and therefore at the console level, it may not be important. Going forward, you have the same thing on the utilization of the borrowed funds and the share premium, the crypto, the title deeds of the more property. In any event, these are the last three items are very clearly not required at all. Those are, there is a clarity here on the title deeds, this registration of the charges and the analytical ratios. And the reason why on the analytical ratios, why at the CFS level it is not possible. So you take a conglomerate of a business which has got an NBFC, which has got an insurance company, which has got a manufacturing industry, which has got a service industry, an IT company. You cannot determine a ratio of the diverse nature of industries at the CFS level, because each of the businesses will have its own analytical ratios. And there is no one, yes, you can have a net profit to the total turnover, but you can't really have a lot of other ratios which are, extremely connected with the nature of that business. And that's a reason why at the CFS level, some of these items do not apply. That's the kind of, the big brother changes which happened last year. So that's just for, overall understanding of what's happening at the SFS, CFS, and then what do you produce and what you do not produce. And what I did was to try and look for the public available information. And of course, I do work for the institute in various capacities. So I obviously cannot reproduce what we do in our personal capacity. This of course is available in the public information. Some information without obviously on no name basis, if it is of a professional interest, because if I can correct myself, I think it is important for us to be able to, share that knowledge, so that if I have made a mistake, it is not necessary that each of my professional brothers must make a mistake. I think it will be unfair to the knowledge which we get from the institute platform. And when the Gautam and our chairman thanks me, and I always tell them that it is we as speakers who have to thank the organizers, because it gives us an opportunity to reflect back and say that whether has my understanding over the last year, does it require a change? Do I need to relook at what I thought was the position last year? Am I wiser this year? And I think I owe a lot of my professional knowledge and, the opportunities which I get, it's just thanks to the institute and the WRC who continuously gives us the opportunity. Of course, like listeners, the presenter also has no choice but to, go back and prepare. And, it's not just one more cut and paste of presentation which was made. So of course, you have to do your practice as well. So quickly coming down, we have all grown up. Previous year's last line item on any financial statement, previous year's figures have been restated, regrouped wherever necessary. And we think that this is the Brahmastra in our hand. And let me tell you this is your biggest atom bomb sitting for your clients to get your notices, because if last year's numbers were under a non-current liability and this year on a restatement, you wisely thought kaun check karta hai, restated to a different level, please be ready to get your love letter. And the reason why this is happening is that there is a process when you restate, and it is not a kind of the, a loose sentence, because the other sentence which we generally find a matter of big concern, and in all my excellence in financial reporting, where we have 15, 17 of the committee members, and the other aspect, current assets, loans and advances, debtors, creditors are subject matter of confirmation. Now, my friend, if your entire balance sheet is subject matter of confirmation, then why even give an audit report? You should have simply said, I can't even audit. This is not it is not an escape route available to you, because once you say that as a sentence, the next question on your auditing standard is that what alternative procedures have you performed? You need to know very, very clearly of what choices you are making in your financial statements, because if you make the loose statement, not only the mirror will be shown to you, but mirror will be shown to you from all the four sides. It's going to be extremely difficult. And therefore, I have always maintained one aspect, that audit is something where, unfortunately, what happens is that we are so built, wired to come back and say that we do things in a sequential fashion, and we do not always do things in parallel where possible, in sequence for sure. And that's one tool the engineers, and that's one tool the medical doctors have, is that they are able to decide what will go in sequence and what will go in parallel. Now, if I have my engagement for March 23, I know I have my 30 audits. It's a repeat audit. Why will I start looking at my completeness of my audit, my notes and everything only after I finish my work? Why will I go to the touchline and then come back and say, and then what happens is that because there is lack of time, you will find yourself in signing because there is a pressure. There is a pressure because the bankers are going to levy penalty. Your client's loan documents are not getting renewed. And therefore, the pressure shifts from what is supposed to be the client, the pressure shifts onto us as professionals. And therefore, it is important for us to be able to look at some of these presentations from the perspective of coming back and saying that, why can't I do my homework ahead of time? I mean, like assuming that the company balance sheet remains more or less similar to what it was there in March 22, you can still do your validation of your commas and full stops and completeness and what have you eliminated, and whether do I need to eliminate or do I need to bring it back, or if what I gave last year, do I really need to eliminate it? Whichever way it is. So you have this where, the numbers changed. Obviously, the two paragraphs is about para 45, and I leave this presentation with you also. I'm not just going to read about, the exact terminologies, because you all can always have the advantage of complete, because I've tried to produce the standards wherever I can. And so it says that it has to be continuous unless you have the condition. And then, of course, the view of the FRRB, it was viewed that the incorrect balance has been disclosed by the company. And these are how your previous year's figures. Now, what do I do? Does it mean that I cannot restate? And that's where your, for those who are, following the IND AS, the division 2 and division 3, you have the para 41 and 42 of IND AS 1, which is there. What it says is that if the entity changes the presentation or classification of items in its financial statements, it shall reclassify comparative amounts unless reclassification is impracticable. When an entity reclassifies comparative amounts, it shall disclose, including as at the beginning of the preceding year, the nature of the reclassification, the amount of each of the item or class of items that is reclassified, and the reason for reclassification. You only because you've got on the wrong side of the bed does not give you a right to come back and say, I will change my classification. There has to be a justification of what you do. And that's where your para 41, you give your reasons. And if it is impractical, then the next part is that the reason for not reclassifying the amounts, the nature of the adjustments that would have been made if the amounts had been reclassified. So this, if you use, and if this disclosure is there, I'm sure you cannot have a red flag on your financial statements. We heard somewhere, the incorrect terminologies, the tangible assets, and that's why I always come back and say housekeeping on our audited accounts is an important tool, and during the course of the housekeeping is to look for things which are not relevant, because one of the housekeeping rule is to discard what you don't use, and therefore if your audited accounts has terminologies which are not part of your current schedule 3, you obviously need to go and do your discard them. And so one of the aspect was tangible assets being used in the financial statements instead of property, plant and equipment. And believe you me, why this 1122 words are happening? It's not that somebody sitting back and looking at your 200 pages or 50 pages of annual report. This is all data mining. It's not taking the institute of even a fraction of a second to pinpoint that where is this inconsistency, because they have to only do a search word. That's about it. They have to throw the entire search word on your XML files and they will have a list of all the inconsistencies in your schedule 3. So you use total revenue instead of total income. And therefore, whatever, and why is that? You have in IND AS para 54, which says that you have to obviously use the PPE, and the format of balance sheet of schedule 3 tells you why PPE. And that is because the IND AS 1 does not have a concept of a tangible asset. And then that's where your FRRB has come back and said to be avoided for the prepare of the financial statements. They were very lenient, if I may want to say, to be avoided. Goodwill being included in the notes to accounts containing disclosure of PPE. I think anybody who does goodwill under PPE needs to go back to class 1 for sure. I think, our fundamentals of accounting and knowledge needs to be improved completely, and our articles, and therefore sometimes if we want to see how smart our articles are or how smart we want them to become as articles, I think some of these examples is what we should try and throw out them, and we will know whether is there a classroom culture at play or is there really a learning at play. I think it is important as principles for us to be, I would say as strict. No harm. I think if we want our next genre of professionals to be what we want, what sometimes it took us long years. Maybe our principle was not as strict, and therefore maybe we became lax. Maybe we are wiser today. Why should we allow our articles to suffer? We'll use the advantage of this session for the purposes of ensuring that people around us are gaining. So obviously the goodwill is a separate line item on the face of the balance sheet and obviously cannot be a part of PPE, of course. And that's the requirement of schedule 3. You have intangibles and intangibles under development. And this was a balance sheet where it came in this sequence, the intangible assets under development and the intangible assets. And in another instance, the intangible assets under development was classified along with table of plant property and equipment. And this is what your the schedule currently says: PP, CWIP, investment, goodwill, other intangible assets, and intangible assets under development. You can't be serving dinner at the breakfast time. So if this entire balance sheet is hard coded in a certain sequencing with the ability to insert, but it does not give you a right to come back and say that if I start in division 2 and division 3 is your NBFCs, which is by the liquidity method, where your current assets becomes prime important, because that's what the NBFC is all about, or the banking industry, not the banking, but the financial industry. And if I turn tables there, we have a problem. And so therefore, your intangibles under development, you have this is your one of the classifications which are there, and then others. And when anything is going in your others category, you have to specify nature. And I have seen balance sheets where under your intangible, the asset itself is intangible. Now, if anybody can tell me what intangible asset is by itself, I mean, like, we must give him or her a gold medal if they are going to come back and say that I have acquired an intangible. There is a characteristic of what is a part of an intangible. Intangible is it's everything put together is a classification, but it's not an asset by itself. I mean, this is the level of which we are finding that and this is happening in balance sheets. And why is it happening? I think that is what is going to be a little more important for us to know, that why does this innocuous words creep in? Is it that we are in a tearing hurry to complete our work? Is it that we have spent 95% of our time in doing the audits and giving very little 5 times to give it a closing touch? It is for us to decide. And then, of course, therefore, the FRRB comes and says that your presentation was not in order. The tangible nature of tangibles was not disclosed, and therefore that is not in compliance. And of course, your including intangibles under development with PP itself is non-compliant. So you can have in front of you. You have loans to related party. This is the disclosure which was made, current loans to related party between the 2 years. The requirement here is that the loan shall be classified, and then specifically for the related parties, you will giving the details thereof, and you will further give whether they are good, secured, unsecured. There is a increase in credit risk, and whether is it credit impaired or not. Only because it is a related party does not mean that the last 2 will not apply. You've seen more and more companies where internationally under joint ventures, if those companies have gone down under, those investments can be credit impaired. So only because it's a related party or an associate does not mean that it is only either secured and good or unsecured and good. And therefore, the answer obviously was evident, was not classified in the categories as far as that disclosure is concerned. And in specifically, I have, while it is not part of the observation, because that was not the question in front of them, was about the significant increase in credit risk and whether they were credit impaired or not. This is a case of an example, where whether your left hand and right hand, whether does it work in unison or they work at a divergence. So this is a classic example, whether when somebody runs through the entire audit report, do you look for inconsistencies between what have you said in one note and what are you going to say in the second note? And this was a case where the disclosure was on the investment schedules. Under the related party, these were the 2 disclosures that these 2 companies, the second and third, were the wholly owned subsidiary. Now, what happens? You have the requirement of para 10 of 27, which is a standalone financial statements. You know that the subsidiaries can be measured at cost or can be measured at the fair value that the instrument by instrument choice is available to the company. This is what your Schedule 3 talks about, that how your investments are going to be classified, and therefore it is in equity, preference, government. And then under each of the classifications, it can be subsidiaries, associates, joint ventures, or structured entities. That's how the matrix flows. Now, obviously, the person didn't relate to the fact that in the RPT, it was a wholly owned subsidiary, but when it came to the investments, it became there was no disclosure. You could not have got any marks for this. And why sometimes I'm talking about marks is that National Law University is the only university where there's negative marking. So you could actually get negative marks in an MCQ, because what it says is that you just cannot select by throwing a dart that, oh, this is 2 marks, mila laga to kya bolte laga to tukka nahi laga to whatever that is, you will get -2. So technically you forget getting 40, you will probably be -40 because there is twice the double negative marking. And the reason is that they do not wish you to start experimenting on subjects on which you do not know. So coming here, therefore, this company obviously did not give this information around whether they were carried at cost or at the fair value. And of course, they did not give the information around the subsidiaries. And therefore, what are the points to ponder here? So you have the further classification under the 107, which is not part of your schedule 3, which is to give the breakup of your investments under each of the categories, whether they are at the cost for subsidiaries, otherwise amortized cost, because mind you, cost and amortized cost is not equal. A lot of companies, when it comes to the wholly owned subsidiaries where they're carrying at cost, they write under amortized category, because what you are finding under 107 para 8 is a category, because 107 does not deal with your 27 as a choice. So therefore, there is a category of cost for the subsidiaries, but for the rest, it can be at the amortized FETPL designated, which is mandatory, or where you have a choice, you have which is measured at FEOCI, or which is designated FEOCI, because those are the mandatory and instrument by instrument choice. And because the schedule 3 does not specify that how do you categorize this condition vis-a-vis the condition of what they have stipulated. Now that's where your matrix of the institute will come in play. Very nice guidance note for you all. You know, if you want to come back and say that, okay, how do I on the x-axis and y-axis, what can I do? That's your point. So wherever we have these items, please look into the aspects of this matrix. This is one of the cases around the expert advisory opinion where this question was, and I think most of us deal with this issue, is about the scrap. Most of the companies will come back and say, I will account scrap as other operating income as and when I sell it, right? Now, whether my inventory of scrap, whether is it something which I need to have increase, decrease or not? I mean, that's a kind of a dilemma which everybody faces. I don't think there was a dilemma, but nonetheless, those were questions which were coming in, and the matter went to the expert advisory committee, because one of the CAG insisted that whether the treatment by the PSU was in consonance or not. So this was published, I think, in 23, 22 somewhere. I'm not sure exactly where. That's query number 123. The question here was that the company was disclosing sale of scrap and the net movement of opening closing under other operating income. So your other operating income was a combination of your sale price and your opening closing. So it was a combination and not just a sale price of your scrap. And the company probably felt that there was no guidance anywhere available. So this was the best we could have done, show the inventory, but the movement I will show it under the other operating income. And the question which was asked, that whether the sale of scrap as other operating income or under changes in inventories of finished goods and work in progress, because these are the two topics which are there in your increase decrease under our schedule 3. And the opinion was that the change in inventory of this scrap in this case should, and generally should be disclosed separately under the classification changes in inventories, finished goods, work in progress and stock in trade, because they did deal with the joint product and byproduct and pure manufacturing scrap, but they have finally analyzed the entire provisions of the Companies Act, the accounting standards, the disclosures, and then said that the scrap is nothing else but the movement in this category of your increase decrease. And what you can therefore show is your you could not have shown this under the other operational revenue or income in the profit loss account. We should know that there is no concept of other operating revenue. There is operating income. And so obviously because it was ESC, they are not obviously regulators for but then nonetheless, there is a passing remark also made in their opinion that the terminology used by the entity was incorrect. So not only the treatment and disclosure was incorrect, but also the terminology used was incorrect. Just quickly to refresh some of the aspects on the trade payables due for payment. I hope to leave 5 minutes for some question answers. So that's the reason why I'm quickly refreshing. So we know MSME, others disputed, undisputed. You have these buckets, and then unbilled dues shall be disclosed separately. And that's where you specifically have the guidance note dealing with what does the unbilled payables mean, and what would be the correct classification, whether can you put it under provision or is it a trade payable, whether is it a liability. And that's where this question comes in, because it is important that IND AS 37, the terminologies are there, they are not interchangeable, and therefore you could not classify an unbilled payable as part of the provision. It is important for us to understand, because it is sometimes possible that you have this is very true in a contracting industry, where you have come back and said that unless you have accumulated maybe 1 crore of business, you will not bill, because you don't want the organization to suffer the the efforts of measurements unless it is achieved at its size. But on a cutoff date, you certainly have received certain goods at your premises. If it is in the factory and that transfer of liability does not happen, then this undue payable will not come in. But if they worked on your property, for sure, there will be a liability, and therefore there will not be an invoice from the vendor or a service provider, but you still have an unbilled payables. Similarly, you have on the trade receivable, this is under the IGAP, the accounting standards, the old accounting standard, not the old, the accounting standards and not the IND AS. You have this considered good, doubtful, disputed, trade receivable, and then the breakup and the unbilled dues shall be disclosed separately. There was a lot of confusion around that whether unbilled dues shall be disclosed separately, whether does it mean under a trade receivable or does it mean under a separate category of your maybe other financial asset, and therefore your contractual arrangements will be extremely important for us to know that whether if it is going to be received only on passage of time, then you have a right to receive. It is only on account of the deferment of the billing is one part of it. But if you have to perform additional services and the cost which you have incurred in the intervening period is not trade receivable. Trade receivable per se means that there is a right to receive. It may not have become due for payment. There's a distinction between a TR and a bills receivable, and a lot of companies make mistakes. And one of the early balance sheets which came out last year, and a lot of copycats happened, and then obviously they also changed. And it is important that we as professionals, while we look at our professional brothers' work, but our intelligence cannot go out of window. We have to use our own. Yes, these are good reference material. They obviously, the larger reference material means that this has been researched well, but that does not mean that we don't have our own viewpoint and our own analytics to do. This is under the IND AS, where you have this, obviously the credit impaired and the increase in credit risk are the additional terminologies which is not prevalent, which is not available under the accounting standards. So again, you have this guidance note which gives you this information on the unbilled dues. And then obviously this one big question also came in around, and this is also dispute I think the auditors have with the client, that whether if I say that disputed dues, and this question which was being asked by one of the Navratnas was that I have disputed initially because I don't want that bill to go through the bill passing procedures, and after 3 months I regularize it. In my bucket of my liabilities, do I say that my day zero starts from when I just cleaned up my internal act? Until then it was disputed, and that CFO and that accountant was not willing to go back and say that it was not disputed in day one, and therefore it will be shown in the bucket from the time it was due. And he says that if I do this, I will lose my job, because under the Navratna conditions, they were not supposed to have been set on the vendor's invoice for that long. So look at the challenges we as auditors have. It's not just about a disclosure, but it's also an argument which you are having with the preparer side, because somebody's job is also at stake. You have the PPE and the disclosure aspect of the change. The revaluation is something which is available to you. So if it is happening, this is for you to look at it. Some of the aspects on the immovable properties, that what are the things which you need to look for, and if it is jointly held, because you do have this as a significant concern in many companies, that you may not be a full owner, you may be a partial owner, you may have an interest in an undivided land, maybe a specific area in your because like in Karnataka and the other states, like in Maharashtra, we have the MOFA, where the society becomes the owner of the land and building and you have a right to use. But in other states which does not have a similar provisions like MOFA, you have what you call are the undivided interest in land, and then a specified area in the superstructure. So how do you deal with it? You have this guidance note also, which comes handy. The CWIP, again, a lot of questions here happening, that whether the projects, because a lot of companies would like to, combine everything instead of, giving complete list. So here is where you will have to decide in terms of the criticality, in terms of the dimensions, in terms of the revalidations, extensions. So, a lot of information happens, and these are all areas of work which can always, happen simultaneously. I mean, this is what I was saying, that one need not go through a sequential aspect to fill up everything in the disclosure aspect. These are your aspects on the financial ratios. The key points, of course, there it is giving you the guidance note on the suggested formulas, the methods to be used, the numerator, denominators. There, a very good practice, while the Schedule 3 does not insist, is that when you design your ratios, it is always a good practice to say, what am I considering in my numerator and what am I considering in my denominator? There's a lot of inconsistency in this area. I see day, but somebody sitting in probably on the west side may probably seeing the night. So, we find a lot of inconsistency around the ratios. Of course, this is your guidance noted group, some of the close group related, the promoter shareholding, the KMPs, and then of course the 186.4. This is another area where a lot of companies are making a mistake in terms of not fully being compliant, because while this requirement is not flowing from your Schedule 3, this is flowing from your Section 186, because like you had Section 22 of the MSME Act, which says that now the MCA amended, but until the amendment happened, a lot of companies, including charitable trust, never gave disclosure. And for a charitable trust, let's commit, your Bombay Public Trust Act Schedule 9 does not have currently the dues to MSME. But please remember one thing, Section 22 says that wherever there are audited accounts, financial statements are prepared, MSME disclosure under Section 22 is a must, and not necessarily only when your regulated entity has, LLP does not have this amendment. Does it mean that we will not give this breakup? You are bound to give, because Section 22 will have an overriding effect over the balance sheets. You are not, that's your LLP, trust, partnerships, charitable trust, individuals, businesses which are whose balance sheets are being done. That's a part. So here is where your 186 flows in. Borrowings, of course, not used, then what do you do? And then secured by current assets, what do you do? And many a times, the reconciliation between your inventory and debtors given to the bank. Now this is becoming now of course, because every borrower has understood the importance of this aspect. So I hope that 23 we will have less headache around the mismatch between the two. That's your guidance. And some of the compliance with CSR. This is becoming another significant aspect of the validation. You have this presentation related to the changes which happened. Only from a terminology, you can see the tangible became the PP, or other current liabilities become short-term borrowings, long-term. And then you had on the division 2, you had these changes around the financial liabilities, where there was an inconsistency, whether is it another financial liability or is it another liabilities. And then of course, it was eventually decided that India actually took this call, because internationally there is a big argument that whether a financial liability is necessarily a borrowing or not, because it can throw your gearing ratio, your borrowing covenants for a toss. Because there are your borrowing rates are on a premises that your debt equity ratios will be below a certain threshold. And the moment you start putting your ROU liability under a borrowing, your the covenants under the lenders can undergo a jeopardy. It can result into enhanced rate of interest. It can result into an enhanced recall of the loans, because those are the covenants under the. So it's not, it's not just about aspect of a bucketing. It has its own implication for the client, and therefore sometimes when we are bucketing this under the financial liabilities, and if there is a bank borrowing, I think it is important, and that's where the value addition will come in. And I heard the chairman say, right, that if this professional, while you are gathering professional knowledge, if networking is one of your objectives, I'm sure if there was a covenant breach, and if this was what you were supposed to do, and if you bring this up and you give an additional disclosure, maybe the client will see you a little more differently when you ask for a fee rise for next year, because then they will come back and say that not only have you done your audit right, but you have also helped me get my business right. It has not costed us anything, but probably it is probably, your opening remark for a revision and fee would be that much more easier, because it's not just about one more timely completion, but maybe little more value addition to the entity's work. That's some of the aspect on the profit and loss account for the grants and donations and rounding off. Of course, this is something which is now mandatory for all sizes of the company. Now, no longer it's optional. Register satisfaction of charges there, the undisclosed income, this is what is obviously there. The stock of companies where I mentioned, comparing, of course, the challenges of comparatives, disclosure, analyticals, aging, the reading of the material on guidance note is a sleepless night. I mean, it continues to receive. In conclusion, it is not the answer that enlightens, but the question. And I hope that this morning I've been able to leave behind some thoughts for the benefit of all my professional learned colleagues. And thank you so much, for being part of this gathering and allowing me the opportunity to share my thoughts on the topic. Thank you so much. Happy to take just 2 minutes. So 11:29 is supposed to be closing. We are at 11:25, 26. Maybe one or two questions, maybe a question. And if not, I think the organizers, Ketan Bhai, would be more than happy to, collect the questions. And yes. Full lungs power, friend.
The transformation is not available, and audit report is also qualified. Then also there is some problem.
See, audit report, if it is qualified, of course, that is then you have come back and decided that whether is it so material that could I have said subject to that, or will I have said disclaimer? It would, but I don't see if the alternative procedures and balance confirmations, if they are not available, and if they are material resulting into a qualification or a disclaimer, then of course.
And some second case, the debtors and creditors are good. We see the past trend, so we see there is no major write-off or write-back. But alternative process also, within 6 months, the amount is not realized or not paid off. So it is not qualified, only note is given. Then also there is a problem to auditor.
Now that's a tricky question which you are asking, and I presume that this question is not under the ECL model, because in the ECL model, of course, you will look at while doing up the ECL modeling, you will look at the past trend and the default ratios, and the determine that even on a simplified approach, what would you be taking as a loss provisioning. But I guess your question is coming from the non-IND AS.
Non-IND AS.
Yeah. In the non-IND AS, so the question which is going to be there, that I don't have a confirmation, I have a supply, and two things can happen. Subsequent invoices have come, the old invoices have not come. You have a problem, because it can be a matter of a specific dispute. Material quality can be a dispute. Why would, and believe you me, a lot of auditors make one error, is that the accountants love this first in, first out. For balance sheet purposes, they want to give first in, first out because they don't want to break the headache with the auditors to explain that why is it a 6-month-old and why is it 1-year-old. And in reality, if you ask that, can I see the statement which you are giving to the management or to your sales team and marketing team for collection, they will nicely produce another memorandum ledger which will come back and say, boss, ye tumhare itne invoices outstanding. So I would therefore always urge that debtors is something which I would want you to, examine a little clearly. It's not whether there is a borrowing or there is no borrowing, but I think it is important from a hygiene factor, and many times the owners are not aware. Let me tell you this. Yep. And of course, so I said that, the organizers will be happy to accumulate the questions, and I'll be happy to send out my replies. Thank you.
Thank you so much, sir. Sir, one question. Since this rounding off has happened, like, a lot of people are signing 2 balance sheet, one rounded off balance sheet for the Companies Act purpose and one for the income tax purpose. So is that fine or?
That is fine.
That is fine.
Because even the FCA last year came up with this, I think in August or September, the question was asked to the MCA in the filing that if the full number balance sheets, while you have complied by giving the rounded off as a signed accounts, but for the XBRL filing, full numbers were given. And the question was that whether was it in consonance with the requirement of the MCA or not. They've come up with a circular to say that if it is given on a full filing, it will not be treated as invalid filing by the professionals.
Thank you, sir.
Their preference, of course, is to have the same rounded off number in their MCA filing, but they did not want to reject it.
Thank you. I think what a wonderful session. A lot of time we, try and plan out the session and try and fix up the time. But after hearing, to such senior professionals, I think, even a topic of schedule 3, I was thinking that ek ghanta kya hoga, but I think, after hearing him, even if you would have given him 1.5 hour or 2 hour, I think you would have done, a proper and more justice. But the questions were asked about the presentation. Yes, presentation with the kind permission of sir will be circulated to all. There are many viewers attending online. So we welcome all the viewers who are attending online this 2 days national conference. The dynamic chairman has rolled out something called My Role at WIRC. I'm sure you all must have received that email. This is regarding, whatever you want to contribute at WIRC, you can respond to that email by, filling up into Google form, and we will be, definitely be very happy to make you part of WIRC in whatever capacity, wherever you are interested. We are having a lot of projects on, hand, including some projects on the research. You can come as a contributor, you can come as a writer, you can come as, speaker, coordinator in whichever, area you are interested. You can, respond to this email by filling up a Google form, which is My Role at WIRC. Sir rightly said that, there's a huge contribution of alma mater wherever we are, and we must acknowledge that. And this is something where we can give back to the alma mater by, doing some role at WIRC. It's not only, we elected member or certain co-opted member, but each member is part of ICAI, and we are the I in ICAI. So please come forward and fill up this Google form so we can try and, build a strong network and team of all the volunteers at ICAI at WIRC. With this, I'll request my colleague in council, Pinky Kedia, to propose a very well-deserved vote of thanks. Over to you, Pinky.
Thank you, Ketan Bhai, to give me the pleasant task to give vote of thanks to our learned speaker, CA Sandeep sir. Actually, when we think about Schedule 3 and updates, no one will be better than Sandeep sir. I believe that. And in the limited time frame, he covered all the aspects of Schedule 3. We generally, we are some or what we are making error in that. Like fixed assets, like I had seen many balance sheet in PP not retained, it was fixed assets in March 2022 also, when we are doing bank audits. in that. So many of the CA are not following Schedule 3, rightly mentioned by Sandeep sir. And he had given simple examples also in a limited time frame, but answer all the questions asked by the audience. And if you have any question, you can submit to us. We will make a consolidated question and send to Sandeep sir for answer, and then we will forward to you all. So, sir, thank you for your valuable time you provided to us. Thank you, and we can move forward for next session. Thank you.
I'll request CA Sweta Jain to take it forward from here.
Thank you, Ketan sir. So we are quickly starting the second session with the small dice changes. So in the meantime, our chairman WRC would like to share one or two most important new initiatives and updates. So I request to our chairman, please.
Thank you, Shweta madam. I think we had a wonderful session. If you really liked it, can we have a huge round of applause for our speaker? Louder, please. Thank you. So, while we already spoke, now this setup is just going on. Let me just tell you two quick things. One is one of the biggest breakthroughs that we have based on our organizational structure. UPI payments were not possible. They were getting difficult, but yes, that has also been breached. So today, for the first time ever in this conference, we have also launched payment for for these registration and for all other purposes through UPI. So whoever must have experienced it, I'm sure they would have liked it. And that is one of our, for us, it's a big achievement because for 2 years we've been trying that. But this conference, auspicious conference, so this got possible. So thank you very much. And I think now apart from this, there's one always this conversation that we always have. Sir, photos to hai, madam is here, sab log le rahe hain, photos humko kab milegi, kaise milegi? So friends, at WRC, this is another innovation that we've carried out. As you see, our theme is pride. P is perform, R is relearn, I is the centric of everything that is innovation, D is distinguish, and E is excel and enrich. Now, if you go to the reception once, whenever you go, you'll find one QR code. UPI nahi, there is another QR code. That is a tool, that is an AI tool, which will help you get all your images in your phones or your inbox. So what you need to do is just scan that, register yourself, register your face. Now, whenever these photographs which are being taken, whenever we'll upload it in our cloud, it will edit, it will segregate, and with your face scan, it will identify and throw these photos back to you. So it's a wonderful technology. Please try it. And I'm sure you will be pleasantly, surprised, and you'll have a wonderful experience. So it's there at the entrance. There's a QR code, just scan it and you will register your face. Your face will be scanned in our cloud, and from WRC, all these photos will come to you. One very important is someone asked me about the company law. Company law mein, how can we not even talk about the so-called V3 and our portal? So for that, let me tell you, friends, the CLGC, our committee, is one of the most dynamic committees in this forefront. We have a help desk, a live help desk. Suppose if you are facing any issues, believe me, the power of this help desk is amazing, because during bank audits, I think, where is Ketan Bhai? Ketan Bhai, and we launched our bank audit help desk live. Every evening we met. There's a lot of brainstorming, and I don't know, but a lot of MOCs were passed because of all these conversations, all of these discussions that we had. So these live help desks are really, really wonderful. They work very well. So Zoom platform and everything. But this CLGC thing is full throughout the day from 9 to 5. It is available. Very soon you will get these emails in your inboxes. Already from WRC, you will get an email saying that this help desk is there. You can log in and you can always go and ask queries. Over 3,000 queries have already been sorted, have been resolved by this team. Let me tell you, and it is a pleasant surprise for me also. Our team from ICI is actually working in MCA with the team of Portal, and they are ensuring real-time resolution of all these issues. So I think Let's have a huge round of applause for this initiative of ICI. Believe me, it's really game changing and really it is really enriching. I think not even company secretaries who use this portal a lot, they don't have it, but we are having it, and in a very robust mechanism. So very soon you will get an inbox also. I've the WRC would be sending you to all of you participants as of now. They'll be sending this. So you may, if at all anyone in your office is facing that issue, you may please refer that. Go online, check with them. Real time solutions would be available. All right, thank you, and over to Shweta ma'am.
So with the young, dynamic and very energetic chairman at WRC this year, we are witnessing a lot of new initiatives by adopting the technology, and definitely I'm sure members are going to benefit from this. So thank you, Chairman, for all the new initiatives. Moving further, after the very knowledgeable session by Sandeep Shah, sir, we have another learned personality with us for our second session, Shashank Karnad, sir. Sir, I welcome you and request to Secretary WRC Saurabh Ajmera, please escort sir to the dais. Sir is a BCom Chartered Accountant, CFE from the USA, Chartered Arbitrator from UK, and also holding executive educations like attended Leadership Development Program, Indian School of Business, Harvard's Leadership Development Program on Managing and Leading Professional Services from Services Firms, Harvard Business School, Mumbai. So he is a founder, partner, and CEO of Mahajan and Ibra Forensic Practices, one of the largest Indian risk consulting firm that was founded in 1979. He is having 27 years of post-qualification experience in cyber investigation, sanction and trade, financial fraud investigation, dispute advisory services, internal audit, corporate governance, and fraud risk management. Earlier, he was with KPMG for 18 years. He has been recognized as a global leader by Who Legal, a global research organization in the forensic accountant category, consecutively for the years 2020, 21, 22, and 23. He has led a large number of class action suit investigations, short seller back attack reviews involving strategic communication and litigation support, fraud risk management, and due diligence engagement. He has been appointed as an expert accountant and has been cross-examined over 30 arbitration matters concerning several millions of USD, both in India and overseas jurisdictions. Over his professional career, he has worked extensively across industry sectors such as infrastructure, BFSI, FMCG, engineering, automobiles, metals and mining, retails, industry and manufacturing, and telecom. He is a regular speaker at industry association and conferences, also was past president of the Mumbai chapter of Toastmaster International, the very renowned American public speaking organization. Friends, it is really my privilege to introduce such an eminent personality in front of you. And I really would like to extend my thanks to Sir Shashank sir for accepting the invitation and agree to be with us on this morning. Thank you so much, sir. And I request Saurabh Ajmera, the Secretary WIRC, to present a memento as token of appreciation.
Thank you for that extremely warm and kind introduction, and welcome to all of you to this session. I will try and make this as interactive as possible because I can see that there are a lot of senior people from industry and profession. The whole idea is to make it interesting for everybody because I know it's a pre-lunch session, the one I'm taking, and there is a high chance that there may be opportunities and occasions where you might want to participate, but there's a likelihood that you might need some encouragement. So I don't know how many of you are from profession, how many from industry. Can I just see a quick show of hands? How many working in industry? How many working from practice of chartered accountants? Industry? Okay. So I'm assuming the rest of you are from practice and you've not gone deep sea diving or into farming or something like that. So great. So with that, a little bit of background as encouragement and to kind of motivate you to be more participative, I've arranged for some goodies for all of you. Hopefully my throwing hand can reach as far as the back seat, but if not, please feel free to come in later and I'll leave it here. There's a box of chocolates for people who participate wholeheartedly, just so that you feel encouraged. Don't consider it a bribe payment. It's not. It's a very immaterial value. Okay, so over the course of the next hour or so, I'll be covering all of this in terms of the coverage. This is what I'll cover, but the most important thing, the most important contribution from your side will be your interaction, your participation. So when you see this, what does it remind you of? What does it remind you of this? What is it? Titanic, okay. What else? What is the proverb that we use? Tip of the iceberg. Tip of the iceberg, right? What does that mean? Upar kam hai, niche zyada hai. So 20%, 10% is visible. The invisible part is what is under the water. Therefore, exactly. So what is this an indication of? ये किस बात को जाहिर करता है आज के session? What is the relevance of this in today's session?
Whatever you do or put efforts that has a more relevance and whatever it produces, just as a presentation. So prepare more.
Right. So prepare for the what you don't know, what is likely to happen, you may not be aware of it. So in the context of fraud, what are we talking about? Anybody? Right. But again, the question is, where do you draw the line? How deep do you go? As an auditor, you'll have a certain budget, you'll have a certain timeline within which you have to finish your work. So where do you draw the line, and when do you know how much to do, how much is enough, so that you don't get questions asked on the quality of your audit? We live in a world where the auditor in the famous Satyam case was, we all know what happened, right? The auditors were incarcerated, they were put behind bars and all of that. So we live in a world where reputation is very difficult to attain, but very easy to lose. So the important bit is how much is enough. You have to run profitable practices, you have to do a profitable audit. At the same time, it's got to be quality. So the reality of life is that today we talk about multiple things. We talk about AI and audit. I won't talk about that today because that's another topic altogether. We talk about using data analytics, doing substantive tests, right? All of it, I'm sure all of you are aware of. But how do you discover fraud? Is that anybody's agenda in the company? Is that the agenda of the statutory auditor? How many of you think discovery of fraud is the agenda of the statutory auditor? Is that the agenda of the internal auditor? Maybe, maybe not, right? Depends again on the acumen of the internal auditor. It depends on what audit programs and audit steps the internal auditor has taken up. Then who's responsible for audit? Who's responsible for the forensic audit? Who's responsible for discovering fraud? What about fraud risk management? How many of you have heard of this concept of fraud risk management? What is fraud risk management? As the name suggests, I can see participation from a few tables. So maybe I can start handing out the chocolates just so that you will feel a little more encouraged. Do you think that will help? If you have sugar issues, then please stay away from the chocolate, give it to your neighbor. But otherwise, you're most welcome to snack pre-lunch. So I thought it'll be a good thing for you to can. So I'm just saying, if you look at fraud risk management, it's nothing but a concept where you say that, okay, which are the 10, 15, 20, 50 fraud risks that are, that are likely to attack my business, right? Today, if we ask ourselves as people, as human beings, what are our top 10 risks? What are our top 10? You could bucket them in financial risk. You could bucket them in safety risk. You could bucket it in health risk. You could bucket it in any other form of risk, right? Reputation risk. It's very easy for us to say, okay, I'll lose all my wealth. I'll lose my reputation. I'll lose my life. I'll probably have a disability or some critical illness, something like that. But for an organization, which is multifaceted, has so many elements to it, who's doing that assessment of fraud risk in the organization? And therefore, this iceberg seems to suggest that all of what can potentially go wrong is not right up there on the surface. It's hidden in plain sight on most occasions. At other times, it is hidden deep inside. Why? Why do you think it's hidden deep inside? Anybody in the, sorry to call you backbenchers, but literally you are sitting in the back. But anybody from that area would like to talk about why is it like that? Hidden deep inside.
I think the organization has not been to the especially they have a which is not right to the organization, the shared values. Being ethical is something which is actually a given, but it can go the other way around also because of certain compulsions, pressures, etc. The organization needs to kind of really understand that whilst it would explicitly call out the shared values, but it is also important to have a culture where all the shared values are indeed practiced. So when you have such kind of a, I would say, a possibility that it can go haywire, that's when you could see certain risks which can emanate from the way people operate within the organization. And also it could be something where stakeholder management is also equally important for us to ensure that the culture of the organization is maintained through the shared values.
Absolutely. From the way it should be, you completely nailed it. Why is it that certain times a fraud risk may not remain detected for years? Why is it? It's very obvious that this fraud has been going on for many years, but it may remain undetected. Why? Simple answer. Planned and layered, hidden. It's very obvious the fraudster doesn't want to get caught, right? So he or she will take adequate safety measures. So they are greater risk managers in many organizations, I would say, right? That's the only consequence. That's the only inference that one can draw. So this is an important image for you to remember, right? When you think about fraud and fraud risk. So henceforth, if somebody comes to you or you are of the belief that, oh, you know, my company is audited by a very big firm. We have a fabulous firm of internal auditors. We have SAP ERP, we have this, that, and the other. And therefore, my risk of fraud is non-existent. And hey, you know what? We've never had a reported issue of fraud. I will look at it the other way. I'll say that itself is a red flag. That how is it that you're a 2,000, 5,000, 10,000, 20,000 crore company, and out of your 10,000 employees, not a single one is a fraudster? Is that possible? No, not possible. My experience suggests that it's not possible. Right from the topmost employee in the organization to the junior most person, everybody is capable of performing fraud, committing fraud, and it doesn't have to do with the amount of money they make, right? How much salary they earn is not going to be a driver. The poorest person in the company may be very honest, but the senior most person may be extremely corrupt. That's the reality of what we see. Okay, so I won't go through the definition of the Companies Act 2013. I'm sure all of you have at least familiarized yourselves with this concept. But in essence, what it says is that doesn't have to be a wrongful gain or wrongful loss. Even an attempted fraud is considered a fraud. And before this came about, I used to have a lot of difficulty explaining what the meaning of fraud was, right? because there was no definition. The Indian Contract Act had fraud defined in different ways, but from the context of a company, this is not defined, but this is now defined. It has talked about somebody trying to injure the interests of other stakeholders also, right? So if management is trying to commit fraud to siphon money out, which has been borrowed from banks, that is also fraud. Because he's defrauding other stakeholders, like shareholders and vendors and so on. So this definition is very wide and all-encompassing. Now let's look at why fraud happens and what are the circumstances under which it happens, right? We talk about fraud, we say, okay, it happens in other companies, our company is very well managed. But why does it happen? Are these people criminals by nature? Do they wake up one fine morning and say, I want to commit a crime? In their mind, what are they doing? Are they these are white collar criminals, right? These are not the typical people who will, wear a mask and break into somebody's house and steal. They will use other means. Do you think there are people with families? Do you think there are people with spouses, with families, with, coming from a reasonably good middle class family? Most of them are, right? Most of them are educated, right? At least bare minimum graduate. They could be CAs, MBAs, engineers, whatever else, right? Senior people. Do they have years of experience? Have they been through ethical code of conduct? Have they been through, a whole bunch of training programs that a company has from time to time? Yes, they have. They spent multiple years. We look at profiling of a fraudster. My later slides will have that. But in spite of it happens for three factors. One is the opportunity. What is opportunity? I see a safe door open. I see 10,000 rupees lying there. That to me is opportunity. Okay, simple. Then perceived pressure or incentive. What is the pressure? Oh, I have to pay my child's school fees tomorrow morning. Is a deadline. I don't have money. That's pressure. It could be either genuine pressure or it could be perceived pressure to say, oh, you know what? I have so many demands in my life and my salary is not enough to fulfill that. So let me commit a fraud. So perceived pressure or incentive. And then most importantly, rationalization. Rationalization is that, the Robin Hood philosophy in life that, okay, if I take from the rich and give to the poor, if I do a victimless crime, if I'm not hurting anybody's feelings or whatever, right, then it's fine. And believe me, 80% of people, research after research suggests, 80% of people are sitting on the fence with regard to this. And I'm not talking about people in this group. Could be your auditees, could be people elsewhere. So 80% of people could potentially be thinking about committing a fraud. If they get an opportunity, they have a safeguard that they will not get caught, right? That is a very big safeguard. If they believe that they will not get caught, they are likely to commit a fraud. The only reason they don't commit a fraud is because of rationalization, right? They say, okay, even if I have this opportunity, even if I have a pressure like this, I will not reach out and take that 10,000, even if I don't get caught. That is very important. How can that be imbibed in an organization? Code of conduct, ethics, hiring the right kind of people, ensuring that the tone at the top is very good. What is tone at the top? What is tone at the top? Sorry? Philosophy of the management. Does the management walk the talk? Are they themselves siphoning money out and telling everybody else, be honest, right? It's like the parent telling the child, don't lie. And when there's a phone call from somebody who says, please tell uncle that I'm not at home. What message does that send to the kid, right? It's very obvious. So I think those are things we need to remember. So this is the fraud tree. These are the different types of fraud. This is published by the Association of Certified Fraud Examiners. There are different categories: corruption, asset misappropriation, financial statement fraud. Our focus as chartered accountants tends to be financial statement fraud, right? Predominantly. Maybe a little bit of asset misappropriation, not so much corruption. Not so much corruption. Outbound bribery and corruption as part of an internal audit. Do we cover FCPA, for instance, Foreign Corrupt Practices Act? Or do we cover Prevention of Corruption Act in India? Do you look at bribe payments, potential kickback arrangements, right? Outbound bribe payments and inbound kickbacks. There's a give and take, right? Those may not be the focus of our work, but those are also important. Why? Financial statement fraud can lead to a restatement. The CFO will get fired, management will get fired. Asset misappropriation, some middle level employees, some people will get fired, right? You'll file a police complaint. Corruption. What happens? the company gets beaten up. The entire organization gets beaten up. It's catastrophic for the company as a whole. Similar to financial statement fraud, but this has regulatory implications as well, because the company and its KMPs will be potentially fined and put behind bars. Right? In India, until very recently, the Prevention of Corruption Act was lenient to bribe payers. It said that if you're a bribe payer, you're not as guilty as a person who's demanding a bribe. Why? Because in India, there was a time when there was license Raj, you had to interact with government. When you went to a government office, they used to ask you for money, so you had to pay that money, so there was occupational hazard of doing business.
The monkey business.
Not many people say that. What happens is, like we all know, demand and supply have to coexist. If you don't have supply, you may demand a million things, but you will not get it. Right? Like I might want to go to the moon for a vacation, but can I do that? I'm not Jeff Bezos and I'm not America in the 1960s, so I can't go to the moon. Right? But the reality is that is the expectation, and therefore now the focus is also on the companies. Therefore, it is a very important aspect to check. Because as auditors, that expectation is that the company is standing protected from this particular risk as well. Because this is, like I said, the most catastrophic. So if you look at Transparency International, India's rank in Transparency International, how many of you have heard of Transparency International? TI? Very few people, right? So Transparency International is a global organization which was founded by people who are ex-IMF and World Bank, right? It's based somewhere in Europe, Germany, if I'm not mistaken. And every year it comes out with a research which talks about corruption perception index. And where does India stand? Somewhere in the 80s. India's rank is somewhere in the 80s. We are not on the top 10, we are not in the bottom 10, thankfully. We are higher than Pakistan and China and some of the other countries, which is a saving grace, but it's not enough. Of course, there are certain other countries like Botswana and others who are higher than us, but much smaller economies. I would say there is enough opportunity. That jugaad mentality or philosophy that we have, right? We have that as a word and we are proud of it, right? Jugaad. How many of us, I'm proud of jugaad, right? We can get things done. But what is it leading to? Where do you stop and say, okay, I can do only this much jugaad, not this, beyond this? You can never do that, right? So that is very important to say. Zero tolerance. India's rank in Asia Pacific is also not very high, right? I'll now show you an observational video, right? I've not shown this for the last 4 years. Before that, I used to show it very regularly. So I'm assuming none of you in this room has seen this. Have you seen it? You don't know what it is. So you can't comment on whether you've seen it or not. You're very guarded auditors, I can tell you that. Right? You will not answer till you know exactly what I'm talking about. So watch this video and tell me at the end of it, we'll ask you.
The monkey business solution. Count how many times the players wearing white pass the ball. The correct answer is 16 passes. Did you spot the gorilla? For people who haven't seen or heard about a video like this before, about half missed the gorilla. If you knew about the gorilla, you probably saw it. But did you notice the curtain changing color or the player on the black team leaving the game? Let's rewind and watch it again. Here comes the gorilla, and there goes a player, and the curtain is changing from red to gold. When you're looking for a gorilla, you often miss other unexpected events.
Right. I don't need to define or explain why I showed you this video. You're smart enough to understand what the core point that I was trying to make was, so I won't waste anybody's time. Profile of a fraudster. Did you know that there is a certain profile of a fraudster? There is. I'm just telling you that there is a profile of a fraudster. And the reason we profile a fraudster is because there are certain behavioral aspects. There are certain ways in which a person conducts himself or herself, which will show you those, right? Which will be red flags, as we refer to in our terminology, between the ages of 36 and 55, right? 69% of fraudsters investigated were in this age group. What is unique about this age group? What is unique about this age group? What happens? Sorry? Family pressures, right? Remember the fraud triangle. What also happens? Need to build assets. My brother is doing better than me. My friend is doing better than me. My neighbor is doing better than me. He's moved to South Bombay. I'm still here in Virar, right? Those pressures come. What else happens? Certain people, sorry? Easy money. That's a incentive, right? What is the rationalization? Remember, majority of the hurdle is rationalization. All of us in this room, I can say with certainty, if you find 10,000 rupees in a safe which is open and you won't get caught, you will not take it. Because you know that's not the right thing to do. किसी और का पैसा है, हमारी मेहनत की कमाई नहीं, right? Simple philosophy. Why? Rationalization. Not because you don't have, you could not do with 10,000 rupees more, not because you don't have the pressure, right? Just that. Also, sometimes people find themselves that they're not doing as well in their career as they would have liked to do. Company has not promoted me, the company has not given me due incentive, no recognition. My peer, my subordinate is now my boss. I'm unhappy with my job and I need to generate more income. So there are multiple pressures that come. Predominantly male, 79%. Why is this? Are men more fraudulent than women? I can see a few women in in this room nodding. They're shaking their head. Sorry? Yeah, maybe women, if I look at this room as well, majority are men, right? I would say roughly 85% are men in this room. Maybe the same in companies, in senior positions. Senior management fraud, right, is a reality. There's a phrase for it, senior management fraud. It's actually called senior management fraud. So 35% holds an executive or director level position because there is something called management override of controls. You have controls, you have checks and balances, but management overrides it. With the result that fraud can take place in spite of the control. Who's checking the checker? Who's checking the super checker? Nobody. Auditor, maybe like the person watching the video of the gorilla. Maybe sees the gorilla, maybe sees the curtain changing color, maybe not, does not see the player leaving the room. Some may not see any of the three, right? Depends. Also employed in the organization for several years. One very key behavioral attribute of a person who is a fraudster is that that person is autocratic and is extremely likely to be friendly with the auditor. Right? If you go for an audit, you will be able to spot this person. The person is autocratic with their team, but very friendly with the auditors. They will try to waste your time. They will take you out for lunch. They will say that, okay, sightseeing ke liye kahan jana hai? If you're going for an outstation audit, I'm sure you come across people like those. I'm not saying everybody who's friendly is a fraudster, but this is a behavioral trait of a fraudster. There are 3 times, you really wonder, they're so happy to see you there and they just don't want you to sit and work. They'll say, yeah, we will deal with all that. What do you want to have for lunch? Here there is a fabulous restaurant, we can go there for lunch, right? Red flag. So these are important things to remember. And most are likely to have colluded. What is collusion? Sorry, ma'am, I think I'm making you feel sleepy. So I'll ask you, what is collusion? Yes, I'm behind you. What is collusion? Not illusion, collusion. Collusion. Anybody else? I'm sure you know the meaning of the word collusion. Yeah, people getting together and perpetrating a fraud. Which 2 people? Any random 2 people? The maker and checker, right? Or an insider and an outsider. Why? Why do they need to collude? The need is there. They don't want to collude because they want to start a partnership firm with somebody else to defraud the company. They do it because there is a need. They can't perpetrate the fraud on their own. So they need somebody to help them, right? And men are more prone to doing collusive frauds. This also is a statistic which you must remember. Behaviorally, that's different. And women fraudsters are more difficult to catch. They're more difficult to get confessions from. My team will tell you that's a reality. We've dealt with 3 women fraudsters, and then I'm quite surprised. Women are not getting left behind in this, right? They are at the forefront of this, and they're difficult to pin down. But women do lesser collusive fraud. Why? Why? Fear. What else? When they collude with another person, they become vulnerable. So they don't want to be, so they'd rather perpetrate small value frauds for multiple years, not get caught. Good risk managers, more careful, more safe, right? A male fraudster will be, he'll get caught when he's like in the 5th or 6th year of the fraud. When he becomes so emboldened that he says, let me throw all caution to the wind. And therefore that person will get caught at that time. That's a basic difference. Now let me ask you, okay? Ethical dilemma. What do you think an ethical dilemma is? Let me give you an example. Okay, I was getting here from Pune, and it was supposed to take me 3 hours, 15 minutes, 3.5 hours. And we were encountered with some major jam on the ghats. And ghats are such we don't have exits, right? Pune-Mumbai Expressway, if you know. There was a choice for me to stay in that and come here by 12:15. Which means by now I would have still been on my way and keep all of you wonderful people waiting here for me to come, which I didn't want to do. The alternative was I could do something which was slightly different, right? Now that is an ethical dilemma. What is that slightly different? Is it okay? Is it not okay? Is it legal? Is it not legal? Now, breaking the red light would be one I could have done, but there was no red light on the expressway, right? It's all open. The alternative was taking a U-turn or going out an exit. There was no exit. So what we did was, luckily for us, there was one Scorpio guy who was taking a U-turn, and we said, why is he taking U-turn right in the middle? And the other side also was traffic. So we said, let's follow him. 80 meters from there, we found an exit. And we came from the inside road. We reached before our expected time arrival, well before. Now, ethical dilemma can be something as simple as this or something very big. Now let's look at the situation. It says, you have just joined as a procurement head of a large company, right? You have moved to a new city with your family. Your 10-year-old child has not got admission in the most coveted school in the city. And that was one of the reasons you moved. Say you moved to Mumbai from, let's say, Delhi or somewhere else, right? Besides the career opportunity, that was the primary reason to agree to move to this city. You casually mention this to a supplier because you're a procurement person. No particular reason you mention this to a supplier. When he asks you how you're settling down, he's just come to meet you. कैसे हैं सर जी, सब कुछ ठीक ठाक, कुशल मंगल, आपको ठीक ठाक, भाभी जी खुश हैं, बच्चे खुश हैं. You'll say, हाँ भाई, स्कूल के एडमिशन में प्रॉब्लम आ रहा है. You'll say, अच्छा, I can help you with that. My uncle is a trustee, managing trustee of that school that you want to get your kid into. I am not doing a transaction with him. As a procurement manager, I'm not doing a transaction with him. I am not asking him for a bribe. This is not a bribe. I'm an honest man. I'm accomplished. I've had years of experience. What do? I accept the offer from the supplier since it is a matter of my young child's future. Entire future depends on it, which school that he or she goes to. Decline the offer and blacklist the supplier for trying to indirectly influence you. Radically opposite, right? I'm like a complete extremist. I will eliminate that supplier. No, next time he won't step into my company. Why? Because he offered to help me with my child's admission. Discuss with my spouse, right? And accept the offer if he or she agrees. Not just my view, right? I'm not deciding, my spouse is deciding. So that could be a boss also deciding, could be a spouse deciding. So I'm basically transferring my responsibility, right? It's like insurance. I'm transferring that responsibility. Or politely decline the offer since according to you it is an inducement. Now this is also slightly, I won't say radical, but a slightly stretched view to say, oh, it's an inducement. I'm not doing a transaction with it. So if I were to ask you what you would do in a situation like this, how many of you would choose, just show me a quick show of hands, okay? Accept the offer from the supplier since it's a matter of your child's future. Show of hands, honest, nobody can see you, nobody knows your name here in this room. I might take it, right? I'm raising my hand, I'm being honest with you. How many of you? Honest reality, right? I can see 5, 6, 7, that's it. decline the offer and blacklist the supplier. How many of you will blacklist the supplier for just a simple, nice offer he has made? Because you told him. He didn't come to you and say, "Main aapke bachche ko admission dilata." You told him. Please remember that. How many of you will do that? Nobody, right? I mean, thankfully, there are kind people in this room. Discuss with your spouse and accept the offer if he or she agrees. Discuss with your spouse, right? It's a simple thing to do. I might do that, right? I'm not somebody in my home, cannot take a decision on my own, right? So I've got to be like 50-50 partnership. So I might discuss with my spouse, but I will eventually accept. Politely decline the offer, and according to you, it is an inducement. How many of you? I'm assuming the rest of you will be in this category, right? Now let's see in reality, right? What your colleagues might do, people that you work with, companies that you audit, auditees. What do you think the world outside will do? You are an ethical bunch of people. You know what controls are, what to do, what not to do, right? We have professional standards from the CA Institute. All of that is applicable to us. And plus we know what is right, what is wrong. What do you think others will do? Option 3. How many of you think option 3? Not you, I'm talking about other people. How many of you think option 3? Show of hands, quick, quick, quick. Lunchtime is waiting for us. The sooner you move, the sooner I can finish my session. Okay. So many of you think that this will be option 3 or option 1. Most will be option 1, right? Correct? Correct? This is I'll tell you what this is now. If I ask people, most of them have said this, just like you have. Can you see the cross? Whereas for their people, for their colleagues and others, they've said, discuss with the spouse and accept, or accept the offer. No different from what you have answered. Correct? Let's look at the next one. Now, this is a slightly more compelling situation, not child's admission. It's a do or die, literally, right? Now, imagine that you have been transferred to a location in South India, far away from a big city. So you're in the back of beyond, right? Nowhere close to the main city. As a manager in the procurement function. Procurement is my favorite function, by the way. You would have guessed that by now. Your parents who have worked very hard to bring you up, right? Through a lot of hard work, right? Poor people, they've brought you up, are very old. Typical Hindi film story, right? They stay with you in your company provided accommodation. One stormy night, your father has a heart attack, right? 70-year-old father. You take him to the local hospital. They say, "Abhi unko dawa ki nahi, dua ki zarurat hai." Right? Like the famous Hindi film dialogue. They say, "We can't help them here. You'll have to take him to another hospital." The bypass surgery is going to cost 8 lakh rupees. I don't know if that's the going rate, but your medical insurance covers only 2 lakhs. Your company's medical insurance covers only 2 lakhs. You do not have the balance money. Poor guy, I mean, he's just moved to a new city. I'm sure he didn't have those kind of savings. You call up a few colleagues, right? What do? You call up your boss, you call up your friend in the company, you call up 3 or 4 people. You just moved. You don't know too many people in that vicinity. They say, "Sorry, I can't help you. I don't have 6-7 lakh rupees right now to give you all of a sudden in the middle of the night." In a short while thereafter, a vendor pops in, miraculously, as if like God, he comes into the hospital and says, "Here is money. I will take your father in a car. We'll go. We'll get him operated. Baki ka baad mein dekh." Your prime responsibility is to help your father recover. Otherwise, he is sure to pass away tonight. Your choice. What will you choose? Honest first answer that comes to mind. You are in this situation. Not theoretical answer. No brainer, right? First answer. Right? No brainer. Now look at your code of conduct. What does it say about vendor payments? Kickbacks or benefits from vendors? 100% of organizations will say you cannot accept such, even in such situations. It may not cover it specifically, but 100% of times, each and every one of us in this room, including me, will accept the offer. Correct? Then what happens to this person? This person goes about his work, right? Next day, 2-3 days later, Pitaji comes back from hospital, hale and hearty. Supplier comes home, Pitaji, kaise hain aap? Theek thaak sab kuch. Baithiye. Right? Imagine that scenario, right? He is God for me. What is a vendor? He's my God. He's not my vendor anymore. Next time there is an order that I want to give, I will call him and say, "Bhai, aap ye karna, aapko mil jayega." He doesn't have to bribe me. Okay, it's a returnable benefit favor that he's given me. I'll pay him back. When? Interest rate, installments, hawa mein. There's no clarity of that at all. No conversation around that. Nothing. You've been very kind and honest and answered that you will do this. Some people have said they'll likely decline, but some people have not been very honest with you. I'm telling you, majority have said they will politely decline. But in reality, everybody will accept, right? But they've said their colleagues, other people will accept the offer. You have said, I will accept it. People have said, हम politely decline करेंगे, but बाकी के लोग तो ले लेंगे. Right? They'll say, बाकी के लोग तो ले लेंगे because हम तो शरीफ हैं, right? That's what most people have said. But in this room, you've been very honest. Now, your company is in the process of subcontracting civil work for a new factory. Why do you think I'm showing you these scenarios? Can we just pause for 30 seconds and understand from you? What is the relevance of this? This has nothing to do with audit. Situations. Yeah. Fraudsters are not bad people. They are not criminals by nature. They are people who are caught in circumstances. They are people who are caught in situations, bad situations, where they have no way of exiting. In 6 out of 10 cases, that may well be true. In 4 out of 10 cases, they will rationalize that they are. Right? But how do you draw the line? Right is right, wrong is wrong. Right? Gray areas are there. The world is 80% gray, people say. But then as auditors, we go into a company, there's either an observation or there's no observation. You have to be clear about that. Now, in this scenario, there's a case of a guy who's a procurement or a construction head, civil projects head in the company, and his brother-in-law is asking him for a favor. He's saying, whatever orders you're giving for civil construction, please give some of them to me at the same prices you give to others. Don't do any special favors to me. You have a price which has been agreed, give it to me at the same price. What will you do? Will you allocate a few projects? Will you inform him that a company has a clear policy that you won't do it? Inform your boss about the brother-in-law's request and do what the boss says, like the earlier case we had the spouse? Or tell your brother-in-law that your wife, who's a housewife, should be a minority partner in Shriji Enterprise, so that she is also able to earn some income. You make the most of an opportunity. You say, okay, I'll give it to you, but my wife should be a partner. What do you think you will do? Would be maybe allocate a few projects to him to help him stabilize, because after COVID he suffered. Inform him that a company has a clear policy of not giving things to your relatives. Or you might tell your boss. I would say some people may do A, B, or C. Maybe majority of you will do C, some of you may do B, some of you may do A, right? Unlikely that many will do D. In this room, I'm sure you won't do D, but outside, people outside, your auditees, what will they do? Do you think there is a possibility that they'll choose option 4? Majority of them may choose option 4. Some may give without checking with the boss. Possible. Some may do A. Between A and D, you would say? Yes, no? Yes, right. It's a fair answer, right? This is what most people have responded for themselves. Either B or C. Allocate. First option. What does informing the boss mean? In 9 out of 10 times, when I'm doing a target interview with a suspect of a fraud investigation, the person says, I had checked with my boss. Where is the boss? He's left. Very convenient, right? Boss is not around anymore. Boss doesn't remember. Have you sent an email? No, but I've discussed this with him. It's transference, right? It's the simple act of transference. That's how we rationalize that what I'm doing is right, because I've checked with somebody. Okay, this is the last of them, and then I have a role play for which I need 6 volunteers. So please mentally prepare yourself, because I'm going to pick people at random, right? If you don't volunteer, you'll have to come here and you'll engage in a role play. So don't go for a tea break right now, right? So as a VP sales of Alpha Corporation, you are due to succeed the president of the company when he retires in December 23, right? You have really worked your way up to the roles of VP sales of Alpha. You're hoping to hear the good news of your promotion to president sales soon. Just then your phone rings and you receive a call from one of your largest customers, a government company in UAE, for their World Bank funded project in Central Africa, saying that your $200 million order for supply of material is going to be cancelled due to performance issues related to both delivery and quality. Right? Not just quality, but delivery also. Delivery timeframes are not being met. You take the next flight to Dubai to meet the customer. You try your best to convince the customer, but that does not help, as there are serious performance issues over an extended period of time that have made the project unviable for the customer, according to him. Just as you are about to give up and walk away, the customer's assistant suggests a solution. Should you be interested? He recommends that you hire a specific project management company to oversee the equipment supply and project implementation, and that the company charges a 5% fee for their services. He suggests the name of Pegasus Enterprises, who he says is a highly reputed vendor. Highly reputed, right? When you make a few inquiries, you learn that Pegasus is owned by the customer's son-in-law, who has helped suppliers in similar situations before. This is the situation. You have a lot at stake as a person. You have a choice to say, no, thank you very much. If my order is cancelled, I don't care. I'll go home. I'll at least sleep peacefully. Let me lose my president sales position, which is due to happen in December 23. Or there are other alternatives. Accept the suggestion as you have a lot at stake, since losing a $200 million order could be troublesome for your career. Let your customer know that you will hire the right project management consultant after following due process, which could take time at the risk of the customer cancelling your order in the meantime. Will anyway cancel your order. जिनसे आपको 1 महीना लगेगा project management consultant hire करने के लिए, to hell with you, I'll cancel your order. Or tell the customer that you will not be able to hire the project management company suggested by him, but that you have an empaneled project management company that your company works with in the region. The customer is not happy with your answer. 3 possibilities. The last says no can do. Second says maybe. First says sure. What will you choose? Sure, maybe, or can't do? Honest answer. First question, answer that comes to mind. Nobody knows you. I don't know you. Will never meet after today. I guarantee you. I don't know any of you in this. First one, how many of you? First one, right? Practical reality. Small price to pay for cost of doing business. Let's look at what people have responded. Most people have also answered like you. Or let your customer know that you will do this. Whereas for others, they've said they will accept this. So what are the risks of something like this happening? You will have to put through certain process, you'll have to show certain documents, contractual agreements will be falsified, certain invoices which will be given will have no value received, no quid pro quo. What have they done? We don't know. We paid 5%. So like I said, corruption in that fraud tree. Remember? Corruption, asset misappropriation, and financial statement fraud. I said corruption is the most catastrophic. This could lead to a serious issue in the organization. Is this something you audit? Very important. Role play, 6 participants, quick. You can stand up in your position wherever you are. If you're feeling unusually lethargic or you've been yawning, you are the right candidate for this. Yes. I think you deserve maybe this entire box, but then I won't be fair to the others. Can you? Let's check your catching practice. Sorry about that. The throw was bad. My fault. Yes. So her point is, I wanted somebody to pick up on this, which is a fabulous point. When we said, what will I do? What will others do? What my colleagues will do? In situations where you choose the better or the right answer for yourself and the unethical answer for the other people, it's often in your mind you have decided what you are going to do. One is the theoretical answer, the other is the practical reality answer. I'm happy to say that this group has largely 90% of cases answered option 1, right? I will surely do it. But majority of people tend to take a holier than thou stand. You know what holier than thou is? I am okay, you are not okay. मैं honest हूँ, मैं ठीक हूँ, बाकी सब गलत करते हैं. हमारे देश में इतना corruption, इतना fraud है, हम तो दूध के धुले हुए हैं. Right? Maybe true in certain cases. Some people may genuinely be honest in every aspect of life, But when push comes to shove, which way do you decide? That's what will drive outcomes. That's what each and every of your auditees is going through on a daily basis across the length and breadth of this country, regardless of where they are based, how much they're paid, what their designation is, swanky offices they sit in, they are all exposed to this risk to a greater or lesser degree. There could be 50,000 other scenarios, which I've not talked about today. Let's look at one such. It's a role play. You can all see it on the screen. Can all of you see it, or is it a little unclear? Okay. I'll read it out because I can read it out easily from here, but I need 6 volunteers. Can you please stand up in your places, or else you will be volunteered? I have a few favorites already. Please come. I need 5 more people. I need one extremely aggressive, dynamic person. Extremely aggressive, right? Somebody who can pitch, never give up. Sales guy. Who's the best salesman in this audience? Who is? If you are that, please stand up. I need one more person. Come on. Okay, I think I'll have to choose now. Please, sir, you can come. Ma'am in the yellow attire, you can come, please. Because you've been very participative, so I know you can contribute. Yes, please come. Yes, please. 1, 2, 3, 4, 5. Okay. Sorry, you can also come. You're most welcome to join. Okay. So we needed gender balance. I'm a big fan of gender balance. Who else wants to come? Please come. Okay, so for this role play, there are 6 roles. Okay. There is a role for the managing director of this company, a young, dynamic, young Turk, right? Who wants to be that? Managing director. Okay, so we'll have to have a vote. Board of directors is sitting right here. Who do we vote for as a managing director? You guys pick, okay? Then you need a executive director finance. Who's the ED finance on the board among you? Please. Okay. Okay, you look like an ED finance candidate, right? You're dressed for the occasion also. Nominee director from a PE fund investor in Dragon. So one of the women can be that, right? Maybe you can, ma'am, be the PE fund director. One independent director. You can be the independent director. Fabulous, right? One executive director production. The remaining 2 can be executive director production and the executive director for audit and risk management. Who's that person who's the safeguard of the company? Right? Okay. Now this situation really is, I'll explain I'll just give a gist in the interest of time. So there is a company called Dragon Oil. Okay. Now Dragon Oil is an Indian upstart. Right? In the last 10 years, it has grown manifold, multiple times it has grown under the guidance and leadership of this gentleman, Rajesh George, right? He's the force behind this company. They've had a successful blockbuster IPO. Even in the last 2-3 years since their IPO, the stock price has multiplied, right? Now, one fine day, one of their suppliers in the Middle East comes to them and says, hey, you know what? There is this, Azerbaijan is a country in the erstwhile USSR, very famous for their oil and gas. Says there is a Azeri national oil company called Azer Oil, which is going to sell. They want to sell that. And they're looking at a global tender. They're already talking to the Chinese and they're already talking to the Saudis who are also looking at this. He says, if you want to, Rajesh, I will set up a meeting with the Azeri oil and gas minister. Right? Now Rajesh is thinking, I want to be globally dominant. I don't want to play I don't want to be like this, that, and other company. I want to be with Chevron and Exxon and all the other Fortune 10 companies, right? I'm sure you've heard of these companies. So he says, okay, I've got to do this. Unfortunate bit is his company's balance sheet is a little leveraged, 2:1 debt equity ratio, not highly leveraged, but yeah, leveraged enough. Plus, he feels that if he goes in for this, because his company is like 10-20 times his size, he'll have to take a lot of debt. Their internal accruals are not enough, right? So debt means what? His debt equity ratio will go up maybe 5:1 or 10:1, God knows. So he says, let me go and at least meet the minister and come. So he goes to meet the minister. Never before been to Azerbaijan. Lands there, capital Baku, goes to the minister's office, which this guy Adam has set up, the vendor in the Middle East. Sorry, I think it already created a earthquake. Abhi tak bhukamp aana baki hai. Nobody fell, no? So then he goes and meets the gives me a little bit of breathing time. So he goes and meets the Azeri oil and gas minister, and the meeting is fabulous. Okay, the meeting is much better than expected. The guy is a big fan of Shah Rukh Khan, Amitabh Bachchan, butter chicken, naan bread, right? He keeps talking about all these things. He knows everything Indian about Indian music, Bollywood. I just wonder, have I come here to have a informal chat or have I come to talk about a serious acquisition? Just then in the middle of that conversation, by the way, let's talk about business. Then he starts saying, and he says, okay, you know what? A lot of people have been talking to me about buying our company. It's one of our crown jewels. And we don't want to give it to anybody. I like you. I like India. I like Indians, Indian culture. You guys will do well. He says, you know, it's like that old Pan Parag ad, right? हम आपसे कोई हम एक ही चीज चाहते हैं. बारातियों का स्वागत पान पराग से कीजिए. So he has two expectations. What? He says, you know, we have some stock options in our company because the company will get acquired, it will get merged into yours. So those stock options will lapse. So I just want you, because I heard that your company is planning to go for an ADR issue or because, you know, to raise funds, etc. From your ADR issue, if you can just allocate $200 million worth of shares to this trust we've created for our employees in the Cayman Islands. First expectation. Second expectation, he says, in our country, there is a rule that you have to work only with a local investment bank. We will not sell our nation's asset or national assets to anybody without a local investment bank being involved because we don't trust Americans, right? So I say, sure. I mean, if that's your local requirement, then yeah, why not? He says, but hang on, whatever I've discussed with you is an utmost confidence. These cannot be mentioned as terms in our agreement. These are informal. Okay. You have to deal with this, but don't discuss with anybody else. Only because I like you, I trust you, and you know, I know India is a growing country. It's the one rising star in this current generation of recession, etc. I'm telling you this because I'm very keen to do this deal with you. We come out of the meeting, Rajesh comes out of the meeting, and he says, what should I do? Right? This doesn't sound okay, but let me just talk to Adam and find out. He talks to Adam, who's the vendor. Adam says, that investment bank, yeah, it's a very well-known investment bank. Goldman Sachs and JP Morgan are looking at buying it. But you know what? That guy's daughter is a partner in that investment bank. Minister's daughter is a partner. She's very accomplished, Harvard and blah, blah, blah. So he says, oh, Harvard, I've also been to Harvard. So he's an MIT Harvard grad, Rajesh. So he's thinking like that. And then he says, okay, but stock options, to the best of my knowledge, are not something that Azerbaijan even has as a concept. They've not adopted that concept. And this is a government-owned company. The chances are it's 100% government-owned. So he says, okay, thanks for that. He says, but don't discuss with anybody. This is confidential. He comes back. Then he comes back, meets with the board of directors, and he's pitching this deal to the board of directors. So you need to pitch this to the board of directors. Your respective roles. You remember your role? You are P nominee, and the internal audit and risk management executive director. Who's that? You are the audit, ED finance, and you are the right, the production executive director, whatever, right? So one of the executive directors, and you are the managing director. So now I had wanted 6 chairs here, or you can stand and do it also. That's fine. So you can make your pitch to them, to the board, and then please discuss and debate this. And the rest of you, please observe this. And then at the end of it, we will discuss certain questions and certain issues. Sorry, can you have a mic, please? So that others can participate. I'll need one mic on this side, one mic on that side, and one mic over here.
See that option which we have received for that ESOP and local investor banker, according to me, it looks sound as far as our company is concerned. But I need you guys' suggestion whether we should go for it or not. So first, I would like to know from you.
So can you guys hear me? Yeah. So the fact that it's not going to be a part of the agreement is something that's pointing towards that, okay, it's not very safe to get into such a transaction. Besides, 200 million is a lot of amount. It's something not all of us have grown up seeing. So you don't want to get caught in something which could lead you to potentially having trouble in the future.
Okay.
And we are not going younger. We all grow up with our stressors. We don't want more stress as we are growing old. So let's work in order and not do hanky-panky stuff.
Okay, good. What about you?
Sir, auditor will speak in the last.
Yeah.
Safe players.
As my managing director has told, we have to definitely go for this. This is a deal which make us to the number one in company in the oil world.
True.
Okay. And I have already talked to the risk manager and the auditor. We are already his buy-in. No, so don't worry about that.
Okay. So auditor will take care.
I've talked to him.
Okay.
There is no problem about it. Now what we have to talk to him is it is about the nominee director and the independent director.
And that I will handle.
That you definitely.
Let's see. Don't make it too easy for him. He's clearly fabulous at what he's doing. He's an MIT Harvard grad, highly accomplished, but he's overconfident also.
Yeah.
So we need to sign a confidentiality agreement and have their financials before taking the discussion further.
Okay. Same. But even we form that confidential agreement, we taken care of your point. There is no doubt about it. But whether that proposal which come to us, do you have any clear-cut negative proposition on that?
The vested interest of the daughter being there in the bank as a partner is also one point which needs to be seen. And the financials, does it make any financial sense for us to go for this kind of?
Yeah, so it means that if the financial support, you don't have any problem as far as daughter is concerned, right? And that if the financial of the company also support well, and that clauses which you feel that should be part of the agreement, then you don't have any issue, right?
Yeah, so first the financials before we come up with any.
Financial would be definitely, absolutely up
Yeah,
to the
so
mark.
that's the first step.
Yeah, it is absolutely up to the
So
mark.
no, before reading the financials, no conclusion. What's the objective we want to achieve with having this
Okay.
organization?
Okay,
What's
so
in your mind?
we will
have
just
to
share the
take
financial
over-
to you. Roughly what figure you have in mind that it should be okay if
Sir,
that financial.
have you made up your mind?
So definitely.
Then we don't discuss and we put it in.
Nee, we definitely discuss,
Yeah,
but
so the
that
next
financial
document-
which you have in your mind, what are the figure for which you are comfortable?
I just want to see the financials.
Okay, so we
I
will
mean, in
share
the
that.
interest of the organization, we should see the financials before making such.
So that I request my finance director to share the financial to them.
No, not one-to-one. Have you had that checking from the organization?
Also the ADRs which you will.
Area in the sense?
Cayman Island Employee Welfare Trust.
Acha.
She's bringing that point up. Yeah, $200 million.
Also, let's see how much of a percentages of the amount they're receiving as money from those backwards. Job, then it makes no sense. We get to attract attention immediately. And Cayman Islands ka rules for everyone knows that you acha hi. Why do we get into something like that? Makes no sense. Let's go straightforward.
What condition we should put in if we really look for this? Because it is going to be a big chunk for our company. So instead of straightway saying no, we should explore and put our suggestion and condition as a counter offer to them to make it more viable.
So what do you mean by big chunk? Can you please, what's in your mind? Can you share your thought process?
That option and the deal which come to our company, if definitely our company get into that offer, definitely that position of our company would be much better. So instead of just rejecting.
Much better in what sense?
Much better in that deal point of view. If you'll get that deal in that our company rather than
So
rejecting
what will
it.
we achieve if we get the deal?
Definitely good name in the market.
Without knowing the number.
Once we will accept that offer, and that offer will be come to our company, definitely there would be a good relationship internationally with that other company, and name of our company would be much better in the market, which will
Then in that
fetch.
case, we should review some other options also
हाँ,
available internationally.
वो आप बताइए क्या ऑप्शन आपके दिमाग
So
में है जो
we
कर
can
सकते हैं.
put, our search into that, my guess, yes. And then look at other options also. If we
Okay.
really want to invest and go international.
Okay. And let us hear from the auditor now. What is their opinion?
Sir, this is a purely a business point of view. So if you are comfortable, if your board is comfortable, definitely you should go ahead. And later, how to do that I will manage.
Sir,
Once you
fantastic auditor.
once you agree, once you agree that you are going ahead with this, so that stock option or other anything that I'll manage how it has to be done. See the banking condition is not a big condition according to me. The banking condition is not a big condition for me, according to me, because many companies put the option of changing the auditors also, and so banking condition is not a big condition for me, and other things you can discuss.
So my auditor is really a so diplomatic answer. दोनों सिक्कों के दोनों पहलू उनको अपने पास ही चाहिए.
सर दोनों बाजू फीस मुझे ही मिलने वाली है.
Good. I think the discussion was quite good. It was very healthy and it was well balanced. But finally, what are you deciding to go ahead with the offer? Is that the vote? Can we put it to vote so that everybody can then finally give their answer?
According to me, we should go for with this order if the whole board agree on this.
With safeguards, caveats, whatever.
Yeah, provided we have a safeguard on this. Whatever the real.
Yeah, independent director is not saying no.
No, I'm resigning.
They are not saying no. They would like to.
I'm not agreeing. If you're going ahead, I'm out of this company.
If management is okay, I am okay.
So anyway, we are in majority. We will go ahead with the deal. No, let him resign. We will get a substitute for him.
I think independent director is also okay. She's just saying find out other options. Principally, she's okay.
See the problem was even they are comfortable. The problem was with you because you called the meeting, but you did not disclose the financials and all those part before. So you email them everything.
Poor guy just landed from Baku after an overnight flight.
With an overnight flight and with a very good offer.
He's an action-oriented man. Right? He doesn't wait. So I think
Thank you
they
very
deserve
much.
a round of applause. Fabulous. Please help yourselves. You can take two because please help yourself. Yes. Two for each side. Huh? But the point is, now let's do a quick debrief, okay? So we have about 5-10 because this was before, we have only 5-10 minutes now. What was going on? Controlled discussion or chaos? Do you think this was a controlled discussion or was there chaos in the meeting? Controlled discussion. He was kind of in control of the situation. He was asking everybody's view independently, not enforcing his view on people. He was getting people to express themselves, right? Who was influential and why? The managing director, the executive directors, the whole board. Was there unity and clarity of purpose? Were actions properly evaluated? MD was very influential. What about executive directors? The ED audit was influential. The executive director finance was influential. No, the executive director production did not agree. He said, I'll resign. So he sees something which the rest of the board doesn't. What is it that he sees? We'll come to that. Was there clarity of purpose? Were they focused on one clear purpose that they had to grow into becoming a global major in the same league as Exxon? Everybody was aligned to that. Independent director also, nominee director also, and people standing on this side also. All of them are aligned. So there was alignment in the board. The means justify the end. Would you say that was the character of this overall conversation? The means justify the ends. Right? What does that mean? That I will ensure that I get what I want, and I'll manage the means in a way where I can accommodate, tick the boxes, baseline, keep myself safe, but I will achieve my objective. Now, how would you characterize the corporate governance in this company? How would you characterize it? Would you rate it on a scale of 1 to 10, 1 being low, 10 being very high? Where would you rate it? 1 or 2? Murtaza says 1 or 2. Where would you rate? Would the rest of you rate them? Where would you rate this if you face this company? 6 to 7. Okay, I'm surprised you're a little conflicted there. Others, what would be your score for this? Half. 6 to 7. Anybody else lower than 6 to 7? Gentleman in the green shirt. You dodged the bullet. I was going to call you here because you're sitting right in front of me. What according to you is the score? 5. Who thinks like Murtaza and says it's 1 or 2? How many of you think it's 1 or 2? Why? Why do you think it's 1 or 2? What is wrong? Yeah. Correct. Bilkul. Where is corporate governance? Is that even a reality in this board of directors? The P nominee, the independent director, they were doing their best, but I think people on this side were pretty much convinced. The executive director production, if he had not offered to resign, he would have probably been asked to go in 6 months. That's the reality, right? The point I'm trying to make is majority of decisions on boards get taken in this way. And what could happen? This guy in the narration said that this guy is touted to be the next president of Azerbaijan. What if there's a change in government? What if something goes wrong? This company, forget becoming a Fortune 10 company, it will become bankrupt. It's given money, it's created some trust. People like me will step in to investigate it. End of story. Yes, sir. Yeah. Yeah. I mean, there is not even deniability because all these things have been discussed at the board meeting. I'm sure the company secretary was taking, making record of all that. Will all these points of discussion form part of the minutes of this meeting? Won't form part of it because there are so many uncomfortable facts that were discussed in the meeting. None of that will be discussed. They'll find ways to work around that, right? How was the conclusion reached and what is your view about the conclusion? Was that the right decision? How many of you think it was the right decision? Right decision? Everybody agrees that it was probably not the right decision to go ahead and buy the way the structure was organized. Were any opportunities lost if the company decides not to go ahead? Were any opportunities lost? There is always this thing called FOMO, right? What is FOMO? Fear of missing out. If we don't do it, the Chinese or the Saudis will do it. Somebody else will grow bigger than us. So we have to run faster. We don't even know who's running after us, behind us or beside us. We just imaginarily have this belief that we're missing out on something. But there would be other opportunities as well. This is not the only one. Like you said, why don't we explore other opportunities where such deal constructs are not there, right? She was being reasonable. Both of them are being reasonable when they were looking at that because they were not executive directors. The point I'm making is people know, these gentlemen know what the right thing to do was. They said so when they went back to their chairs. But when they are playing certain roles in certain situations, they wear a different hat. And that brings me to the concept of what I would do, what others would do. Theoretical answer, I'm sure everybody in this room knows. In practical reality, it's different. Right? I have 10 more minutes, right? 6 more minutes. Okay. I forgot who I had asked that question to. So I'll take you through very quickly 2 case studies on investigation. Okay. You can tell me what your correct answer is. I'm saying you are the internal audit and investigation lead for a company. Your CFO calls you up to tell you that they have what he suspects to be a phishing attack, which is very rampant and common these days, right? Everybody has encountered this. He tells you that an international supplier who your company owed about $50 million to for supply of a large order before Christmas never got paid his dues, right? Last year. Though your company has proof that the money was transferred to the vendor. Upon making initial inquiries, you discover that the team member in the accounts team, an accounts executive who processes payments, got an email from the supplier based in Singapore asking for a change in his bank account from Citibank to DBS. In good faith, the accounts executive went ahead to process the payment on the basis of an email sent by the vendor. Your company has robust processes for change in vendor bank accounts and SAP. When you see the email sent by the vendor, you notice that the email was sent from a Gmail address instead of the vendor's official corporate email address. How will you go about the investigation plan? Right now, we've seen a little bit about what goes wrong, how board decisions are taken, all of that. Why people? Now I'm asking you, if you had to do an investigation, if you had enough cause, here is a case which has come before you. Many internal auditors handle this also, right? Investigations. So what would you do in a situation like this? A, interview everybody and determine the consequences to each individual based on their role in it. But generally, this seems like an external attack against your company. Option 1, carefully review the modus operandi and do not rule out a collusive attack involving an outsider and an insider. Second option. In your assessment, it is an open and shut case of negligence by the accounts executive because the individual did not check for the Gmail address instead of the corporate email address of the vendor. That person is at fault. Negligence, gross negligence, fire, right? You inform the CFO to file a cybercrime complaint and let the cybercrime cops investigate the matter. Basically lobbing it to somebody else. To say, not my comfort zone, let somebody else handle it. What do you think is the right investigation approach? Second, carefully review the modus operandi and do not rule out a collusive attack involving an outsider and insider. How many believe first could be the option? Some of you believe first. Some of you believe fourth. Fourth could also be an option. Because maybe you are out of your depth. Maybe it's not a comfort area for you. Cyber, who knows cyber? All I know is to check my emails and do my internet banking. Beyond that, I don't have the skills and capabilities. Let the cops investigate it. Anyway, it's a cross-border potential fraud. I don't have the wherewithal or the reach. Can you say that? Some people would think like that, right? I'm sure some of you are nodding your heads. Or open and shut case, gross negligence. The person didn't even read the Gmail ID. I saw it in the first instance. How can the person be so stupid? Right? Is that also a possibility? The company might decide, why waste time and money on this? Lob that person out of the company. So what is the right approach? Yeah. So maybe they are covered by insurance. Maybe they've lost the money. They have to pay the vendor. But cost of doing business, you will not recover that money. Months ago, somebody got paid. They've already withdrawn the money, closed the bank account, and they're enjoying in probably Bali or somewhere else, right? So what do you do? The right approach would be option 2. Because A, 2 and 4. 4 would be eventually, once you've discovered what is there. Because you give it to the cops, they'll take 3 years. And at the end of that, there will be a dead-end report. I've seen that with so many people, right? You go to the highest level, cybercrime, whatever, they may not have the capability. So better to do an investigation in-house and try and figure out. So get the experts in, get them to do the proper work. And then as an outcome of that, you go and file a report. You tell the cops, go this, do this, do this. We have determined this. Now you take your, through Interpol or wherever else, get in touch. Right? In reality, this is how corporates function or are supposed to function. Those that want their money recovered, those that want action taken against. Because there are agencies globally, internationally that kind of work together. In India, as auditors, we know that there are responsibilities on auditors. If you get to know about a fraud, there are reporting obligations. You all know that there is a 45-day timeline within which materiality of the fraud also determines all that. I'm sure all of you are aware of that. So anytime you come across a fraud, it's important that you identify, if you're a practicing chartered accountant, you identify the need for you to notify. Please involve, the board of directors as and when required, but the obligation is very clear, right? The requirement for companies to maintain audit trails is also something that came into effect in 2022. So the first and foremost question is, how do you identify your audit universe and what are the additional tests you will do to potentially detect frauds? Because finally, it's the role of the both statutory auditor and internal auditor. I won't say role defined, but it is expected. It's a tacit expectation. Recently in the Middle East for an audit, a very large firm got fined $231 million. I'm sure you've read about it. For an audit of an investment company where Bill Gates and many others had also made investments. Why? Negligence. Court will pass a judgment. They will not sit and say, oh, how many samples are selected and all that. They will look at the big picture. And judges are not chartered accountants. They are the guys who will decide. So how do you demonstrate through your work that you have done certain procedures which are forensic in nature? You have to do that. You have to be able to demonstrate that so that when you step back, you'll say, look, I've done these things. I've been peer reviewed, and therefore I've done all that a reasonable auditor would. And if I've discovered something, I've reported as required under law. Beyond that, this is how I'd like to conclude. Thank you very much, ladies and gentlemen, for your time.
What a wonderful session we had. Let's have a big round of applause for a highly interactive session with Shashank sir. I hope you all have enjoyed this session with the learning. So we request you to have your feedback on our social media pages. We are at Instagram, LinkedIn, Facebook, everywhere at the rate WRC you can tie up. So that will be a great motivation for all of us to have more and more programs like this. And the way Shashank sir explained everything related to fraud risk and red flags in audit, it's really very, very interactive, highly in terms of knowledgeable. So thank you, sir, for joining over here, sparing your valuable time. So before going to another session, next session, I like to announce some important programs which we are doing on 29th of this April at ICI BKC. One program which we are doing is for foreign trade policy. That is the physical program from 10 a.m. to 6 p.m. Then another program which we are doing is program on real estate, the interplay between RERA and GST. Then third one is program on opportunities for Indian CAs with USA. And on 6th also we are doing seminar on 6th of May, seminar on internal audit. So this is the announcement. Friends, we have shared a mail related to the queries on MCA related to V3 portals. We have given helpline desk over there as informed by our chairman sir also. Friends, by this 1st of July, we are entering with the 75th year of our existence as a ICI. And this is the pride moment for all of us. We have more than, you can say 167 branches, more than 8 lakh students and around 4 lakh CA members. So this is a great legacy we have. And that is why we are feeling pride, and we have taken as a pride as a mool mantra for this year. P stand for we have to perform. Then R, we have to relearn. We all have learning, but now we have to relearn from the different time of perspectives. Then I, which is our core, that is innovation. And we are lucky to have the chairman, very innovative chairman, who is doing a lot of innovations. And then D for distinguish, and E for enrich our ecosystem, in which social audit is now is our part. So because of that, we are using the logo and everything, the memento. And for social media following, we have displayed the QR code also. And for photographs also, face recognition photographs which informed by the chairman. So we have that barcode. You can take it in your mobile also. With that, now I request CA Murtuza Kachwala to take it further for next session. Thank you.
Thank you, Shashank. Good afternoon to everyone. So as we set up the dais, may I request Ankush to please escort our next learned speaker, CA Mukundan sir, to the dais, please. Mukundan ji, welcome. May I request everyone to welcome him with a huge round of applause, please. So while we talk about corporate governance, for the statutory auditors and also for the board, audit committee, and the independent directors, I think the responsibility is increasing. And after Enron, the Sarbanes-Oxley came in the US. After the Satyam, the internal control or internal financial control over financial reporting came into India. Tomorrow, we are again trying to discuss during the panel whether this SOX or IFC, is it effective or is it just a tick in the box? Similarly, now there is responsibility for risk reporting. You can call it an enterprise risk management or a risk reporting or a control self-assessment or whatever. So we are again talking about the risk, identifying the risk and the controls. Under 143.12, there is a responsibility on the external auditors to report on frauds. And again, the words used there are suspicion, reasonable belief, and X, Y, and Z. But fortunately, there is a amount of 1 crore and above that, but it is not one transaction, series of transaction. And Shashank also gave us so many examples of fraud. But unfortunately, how do you identify all of those, right? During the course of our audits. Before I come to the topic reasonable assurance, I would again want to drive your attention to the good work which is being done by the Auditing and Assurance Standard Board of ICI. They will come up with the auditing standard on auditing essays, and I think we should read them and comply with them in terms of sampling, analytic procedures, documenting the whole process end to end. So at least as an external auditor, we are able to say, how did we select the sample? Which ones did we select? And what are the checks we did? And while doing that compliance check, I think, again, from a purchase requisition to a purchase order to an evaluation to 3 quotations, comparative statement, purchase committee, see everything end to end so that if there is a tip of the iceberg like Shashank showed, you can go inside, or if there are some large contracts and if there is a kickback or something, and if you find some documents which you feel are suspicious, maybe you can go into those and look into it in more detail, which means you'll have to identify the fraud indicators while you do your compliance checks for the samples that you select. And of course, some of the analytic procedures can also throw up some of the fraud indicators. Now coming back to the internal auditors then, and again in the CARO, now there is a responsibility on the external auditors to look at certain things. Did the internal auditors do a risk-based IA plan? Did they identify and pick up those areas which are high risk during the course of their audit? While doing a particular process audit, did they do that process audit properly? You may possibly have to read the report and arrive at your judgment whether that was reasonable or not. There are certain organizations I know, they say 1 audit in a year is enough. Paisa hi nahi hai, budget nahi hai internal audit ke piche spend karne ke liye. एक ऑडिट किया, एक्सटर्नल ऑडिटर को दे दिया, कारो का कंप्लायंस हो गया, दैट इज रीजनेबल एश्योरेंस फॉर अस, commensurate with the size and nature of business of the company. Some do 2 audits in a year and some do 1 audit report, 1 process every quarter. That's it. Okay, and 4 reports are reasonable according to them. So now again the question is, what is reasonable? And we have Mr. Mukundan. He spent his whole career in internal audit. And I'm sure he will touch upon various aspects of, according to him, what is reasonable. And he covers such large organization, the balance sheet also huge. And I'm sure being in IIA and also being a speaker at ICI and supporting us on so many things, he will be able to share a lot of experiences about various organizations and various aspects of it. So let me quickly introduce him officially. Mukundan KV, Chief Assurance and Risk Executive, currently with Alcargo Logistics Limited since 2010, has more than 3.5 decades of versatile experience in manufacturing, consulting with Big Four and service industries. He is a chartered accountant rank holder CPA USA, CISA, and a CIA. He was honored as Chief Minister's Fellow by the government of Madhya Pradesh for innovative suggestions in the field of accounting in the year 2002. He is currently Vice President of IIM Mumbai chapter, a member of Governing Council of RM Next, an informal forum of risk professionals, and a member of the Ashokam National Council of Internal Audit and Risk Management. His current responsibilities include overseeing the assurance and risk function for the Al Cargo Group, mainly Al Cargo Logistics Limited, Q Worldwide, and Gati Limited, and other joint ventures and subsidiaries. He additionally performs the role of whistleblower officer of the group. So let me welcome him, and may I request, Sir Govindji, please join me and to offer a memento to Mukundanji. I request Ankush also to join me. While the presentation comes on, let me also request everyone to please join WIRC and ICI on various social media platforms as well. Please join us on LinkedIn and Facebook and also on a Twitter. We want to increase the followership. It will be helpful for us to spread and communicate whatever is happening to you easier. Thank you.
Good afternoon, everyone. Good afternoon. So first and foremost, it's not the role play, which happened a few minutes ago. That was only a role play. And what Murtuza talked about, that is a role which I actually play. So, I want that everybody should be there, First of all, a grand welcome to this session, today's afternoon session. And thank you very much, the entire office bearers of the WIRC. Murtuza, my good friend, he has been always, we have been interacting multiple times, on the internal audit front, as he rightly said, 3.5 decades, 37 years, I started my career as an internal auditor. In between, I was there for some time as a statutory auditor when I was a practicing CA for a short time. But otherwise, I have been always, as an internal auditor. And just to give you a brief, 2 sentences about the company or the group with which I work, it is a, I started working with this group as 2010 and my assignment was to set up the internal audit. Okay. And there was no internal audit department, in-house internal audit department prior to the company. And when I joined this company, this was a $500 million turnover company. Today, it is a $3 billion turnover company. That is about a 20,000 crores turnover plus. And we have 2 listed companies, that is Al Cargo Logistics Limited and Gati Limited, which is a subsidiary of Al Cargo Logistics Limited. We are present in 180 plus countries, about 300 offices. So I currently manage all these functions relating to all the complexities relating to all over these countries, where globally we control the internal audit and risk management and lot many other things, which our previous speakers talked about all these things. I set up, and for the past 12 years, I have been doing this. Prior to that, I have worked as a statutory auditor, so I can understand that, what are the intricacies, So you want me to speak about the internal audit or statutory audit or which way you want me to speak? I'll be speaking your language. Both. Okay, very good. So absolutely no problem. So let us start this one, and this will be a very interactive session. I want you to everybody to be interactive because I am standing in between you and your the lunch. Okay, we have about 45 minutes time. You know, we will close at 2, and we will also keep around 5 minutes for the question and answer. Otherwise, anyway, my phone number is there. Anytime, you know, Murtuza is my good friend. Anytime you can, you know, get in touch with me. So we'll finish it on time. That is my my commitment to you. So whether you do statutory audit or internal audit, you know, time immemorial, and even our epics have recognized the difficulty of our audit function. So I did not write here internal audit or statutory audit. You know, whether it is internal audit or statutory audit, it is very difficult. So this is, you know, this is our, it is written from Arthashastra. Okay, I will read out. Just as it is difficult to know if a fish is swimming in water, is also drinking the water, it is difficult to detect its officers appointed for carrying out works or stealing the king's wealth. This is before Christ 300. Okay, BC 300. And this is from Arthashastra, Chanakya has written. And when he has written, it is not that he has discovered everything. All these things are coming from Vedas and Upanishads. You know, so it is not that this. So our profession was recognized even those days, the importance of this profession. You know, the only difference what you can find, 2-3 differences is there. You see, there was no distinction between internal audit and statutory audit. We had only one stakeholder, that was the king, nothing else other than that. And if you also look up, you know, we talked about now reasonable assurance. At that time, whatever we were talking about, it was only absolute assurance. There was nothing that this one, you know, I have not talked to Chanakya on this, but this is the way in which I visualize the entire program when I am talking about this one. So this as a process, when you look at it, you know, okay. Now I will take you to lightly, you know, slightly to a sensationalization, so that then you understand, you know, definitely it is a hunger time. I know that we are waiting for lunch, but let us also hunger for the knowledge. Okay, so let me sensationalize a bit more. All of these are publicly available information. Okay, these are all publicly available information. This is not something created by me. Okay, and these are definitely gives a lot of discomfort to all of us. You know, when this is talked about in this, this is talking about internal auditor. Okay, now let me see the further. It is talking about, you know, the activism what is happening. You know, so this is the so now I talked about internal auditor. I talked about statutory auditor. Okay. Now, this all these things definitely gives a lot of discomfort to all of us. You know, this is where this is, and how mainly this gives discomfort over and above this, the activism which is happening on the media front. You know, the media, including social media, the public media, the other newspapers, other TVs, and everything, and the number of channels. You know, the media channels. You know, when I started 38 years ago, probably there was no media channel. There was only 1 or 2 newspapers, not 1 or 2, probably a little bit more. But nothing, there was no TV channels, and now the number of channels available, and there was no WhatsApp, there was no other social media available, you know. So you can imagine that how these things. So when the media trial happens, you know, before the judicial media, the activism happens, the media trial happens. How does it happen? Instant and more often sensational judgment, you know. And how the judgment happens? Why was it not detected? First question, you know. And he doesn't know who is statutory auditor, internal auditor, or anything else. Collusion. Auditor उनके साथ में था, वो दोनों मिलके किया हुआ है, you know. And this we talked even by the chai wala who doesn't know who is the auditor, who is not even the this one, you know. Negligence. They don't know nowadays anything. Incompetence. Nowadays the people are not competent. Absence of any knowledge of any different type of audits. The difference between the absolute and reasonable assurance, agreed upon assignments or materiality, all these things doesn't matter. You know, issues do come up. The media trial already happened on the auditor. That is where our problems happens. This is where the speed and absence of the content regulation on social media. There's also a big problem. Anybody can write anything. Okay. So these are the challenges. What Chanakya envisages 300 BC. You know, we are really in that sort of scenario at these things. You know, okay. That is where a lot of the institute has come with a lot of guidance note, a lot of you know, standards on internal audit. IIA has, Institute of Internal Auditors have come up over this one. You know, there is no bar on any type of standards. More or less, all these standards speak about more or less similar thing. There can be minor variations on it. So this is a scenario. So I talked to you what Chanakya told. I talked to you about the scenario of the regulatory activism and the media activism. Okay.
Now let us talk about particularly from the, you talked about, you want me to talk about both statutory auditors and internal audit point of view. I'll be talking about both because I have been performing both sides of the functions. But over a period of time, I can tell you that what difference made, whether when the statutory auditors also started thinking about, because when you look at these things, the Mavokar started in 1988. Okay. And I did not qualify, I qualified in 85. Okay. So this was happened prior to that. So I did not study this as part of my CA syllabus. Okay. Afterwards, first time in 1988 it came. And of course, there were different clauses and everything. You have a separate session on Caro and they will be covering on all these. And subsequently, Caro 2003 came. Okay. And more or less whatever we are going to talk today, this was there in 1988 and it was also there in 2003. And what has made the difference today that we will be talking? In Caro came in 2015. When it came in 2015, the internal audit, the comment which was required on the internal audit by the statutory auditor was missed out. Okay, missed out, it was removed. I don't think it is missed out. The removed is the correct English, not the missed out. Okay, then the responsibility of the internal financial control came because these are all relating to 2013 Companies Act amendment, but the rules act published, it was implemented, gazette notification came different time, and the responsibilities on the internal financial control came on the board itself. You know, so it has moved from the particularly earlier the internal auditor was coming. I mean, the statutory auditors were commenting on the internal audit, and it moved to internal auditors. I mean, it moved to board. Then Caro 2016 came. There also there was no comment. The statutory auditor was not required to make any comment on the internal auditor. Am I right? If I am wrong, you should correct me. Okay. So this is an exchange of knowledge. I also want to learn a lot from you. It is not that I am going to just speak to you. And then NFRA came. Okay. So NFRA, these are all origin to the 2013 Act, but subsequently the implementations and everything. Okay. Then we have got Caro 2020 now, and Caro 2020 definitely to talk about these things. So when we are talking about, I not only want to touch only the statutory auditors and internal auditors, because we have got many other stakeholders on the internal audit. So the reasonableness of the internal audit when we are going to be talking about, I'll also slightly touch upon the expectations of other stakeholders also. So, but definitely I will cover the basic requirement of the statutory auditors, how they have to look at these things. So let us see who are the stakeholders on that. The first and foremost, you know, the board and audit committee. Okay, they are the one of the key stakeholders for as far as the internal audit is concerned. Promoters, owners, and key shareholders and trustees. You know, if it is a trust, probably it is a trust. If it is a partnership, and because today nowadays we have got many big trusts. We have got many this one even charitable trusts which have funds of around thousands of crores. We have many, not only one. At least in all these cases, definitely there is this one. But you know, we will definitely mainly touch upon the Companies Act side of it here and there. Regulators, including semi-judicial authorities. So I talked about the arrest and other things. You know, we talked about these. Many judicial authorities are there, but there are many other semi-judicial authorities who doesn't have the arrest powers and everything. Statutory auditor. That is today's main topic. I will be covering only from the statutory auditor's point of view. But these are all the people, those who are there. CFO and other KMPs, because they also give the signature on certifications, multiple certifications they are talking about for the purpose of this one. They also place these certificates to the board. So I have a question on this. NFRA is applicable to the internal audit or not applicable to the internal audit? There is a question and I need answers. You can give right or wrong answer. There is nothing, don't worry about it. Not applicable. Anyone has said yes? Yes. Okay. So both sides are correct. Let me put it this way and reason. You see, NFRA may not be coming on the current the application of the NFRA, the actions, whatever they are all taking on the statutory auditors. But if the statutory auditors, they focus on the internal audit because it is one of their requirement, you know, automatically, you know. So if you don't want to be caught by the regulatory agencies, one of the best thing for the statutory audit is that please invest enough time, because you don't ignore this, that, you know, after several clauses, this is just one of the clauses where I have to comment on the Caro 20. This is the most important clause. And the moment you start driving, you know, because statutory auditors, as the speaker said in the first speaker talked about the, you know, they have a lot of power in their hand. We are still the internal people in the company. Okay, when you talk about what should be the type of these things, the internal audit is required. You see, there are even today when I interact with multiple people, whether me as an IAA vice president or me as a senior internal audit professional, I can understand that there are still lot to do on the internal audit front in the multiple companies. All the companies we here, definitely I can talk about, say, a total top 10 or top 20 companies. They have a lot of things in the internal audit. But if you look at down the line, there are not many companies, those who do a proper professional requirement, whatever is required under the act. So it is the statutory auditors who can push for the governance through the audit committee, through the promoters. Okay, these are the required for the internal audit. Of course, definitely there is an internal audit needs to this one. So to me, so from the statutory point of view, NFRA may not issue a notice to the internal auditor, which may be correct. So whosoever said it's not applicable, but who said it is applicable, from my point of view, because the statutory auditors need the internal audit support. And if you start assessing the internal audit correctly, the fear of arrest by the or any notice from the regulatory agencies, we will be getting rid of that. So from my point of view, NFRA is equally applicable for the internal auditor, because you start demanding as a statutory auditor. That is what the point which I want to appreciate. And of course, general public, proxy firm, and media. Of course, anything happens, they are also one of the stakeholders. So what you need to understand is that they are our stakeholders. So reasonable assurance, whatever today I am talking about, it is applicable for each and every one of us. It is just not. So the most important thing out of all the clauses, because all other clauses are this one, if you start investing more time on the reasonableness of the assurance of the internal auditor, and we will talk more about that, and that will definitely save any sort of arrest, and you will be able to make this judgment very properly. So these are all well known to you, but definitely I'll read out, because that is what is the mission for me today. Whether the company has an internal audit system commensurate with the size and nature of its business. This was there all along. 1988 also it was there, and subsequent amendments also were there, except in 2015 and 16 it was not there, but this was there all along. And what has made the difference? There was no NFRA at that particular moment in time. Am I right? There was no peer review for the internal auditor, statutory auditors. There was no peer review at that particular moment in time. Anything else has changed. There was no media, and there was no internal financial control. 2013 amendment was not there. Okay. And what made the 2013 amendment? 2013 amendment made the internal financial control, IFC responsibility. There was no LODR. There was no LODR from the director's point of view. So this was all not there earlier, and now, because after the 2013 amendment, all these things started coming. And when all these things started coming, so now today, let us see how the implications of this one. There is an internal auditor. There is a lot of responsibility on the board and audit committee itself to monitor the internal auditor. There is a statutory auditor. He also has to certify, what is now how many policing is happening on the internal auditor. There earlier it was given only to the board, and from the board, okay, board is doing or not, statutory auditor, you have to check all these things, So there is one more policing. So now the policing is on the board as well as for the shareholders, independent statutory auditors and other things. So what all have changed? The way in which we govern the company, it has changed. It is though there was a good role play, still these things do happen. So in order to protect our profession, I am talking to you as a professional brother, professional member of ICAI. Okay, we have to play a bigger role as an internal auditor. Probably I am playing as a statutory. You have to play. It is very, very important for all of us to invest time on this, understand this, conduct more and more sessions like this. Where and ensure that we demand these things from the board and the management. So finally, what will happen? Our governance will improve. It is. Today, even after all these things, the previous session talked about the practical aspects of the governance, or where at least I talked about, Murtuza talked about, the governance mark is only 2 out of 10 or 3 out of 10. So what happens is that still, even after these things, people mindset have to undergo change. It will take much more time for that, doing that. And the second thing is, I am not too much attaching too much importance. So the way in which I look at these things, like it's like this. If a diagnosis has been done, okay, then multiple treatments are available. So for me, whether the reports of the internal auditors for the period under audit were considered by the statutory auditor, definitely the moment you have all these compulsions coming on you, and as well as subsequently, if you get these internal auditor reports, that is where whether the efficiency and effectiveness comes. After reading the internal audit report, you should be able to assess the effectiveness and efficiency. What is the meaning of effectiveness and efficiency? What is the efficiency? Efficiency talk about productivity. That is, with optimum resources, you get the maximum value. Now, what is effectiveness? Are you achieving the intended objectives? Are you achieving the intended objectives? That is where. So after looking at the internal audit report, you should be able to understand the effectiveness of the internal audit system. And once you understand these things, then you will be able to comment about whether it is internal audit system is commensurate with the size and nature of its business. All of you are with me? Clear? Okay. Because now, yes, please. Thank you. Yeah. Absolutely. So thank you for asking this question. So how does it happen? Unless and until, so I have been working with multiple listed companies even prior to this also. And so if you work with a statutory auditor, any statutory auditor, the expectation is like this, I want my statutory to come and meet me. And he should start asking me the questions, what do you do? How do you do? Unless and until he start asking these questions to me, I am wanting to meet him. Now, what happens is, unless he comes in a voluntary meeting, so generally, who is a spokesperson for the statutory auditor? It is a CFO or ED, head of the finance, whatever may be the title of that person. So when the initial kickoff meeting, so one is that it is CFO's responsibility to call the statutory internal auditor also in that meeting. Okay, there is a kickoff meeting happening with this one. So he introduced all the people. Generally, this happens only when you change the auditor. Otherwise, it is the same auditor comes every year, and then they all know everybody. For example, today my statutory auditor is the 4th or 5th year for him. Prior to that, so there is no kickoff meeting effectively. That's the way in which it happens. Everybody knows that he comes for a limited review and he comes for a statutory audit review, and he also know my phone number. Mukundan, I am coming. There is no formal meeting or anything. He just comes. With just a phone call or WhatsApp. The way in which it happens, but it is important that each one of you as a statutory auditor meet your internal auditor. Each one of you has to meet. And then we will be discussing more about the process and everything, how it has to be done. There is a checklist already given under the CARO Appendix 5. I am not touching upon that because that is already available. But I am going to talk to you some practical aspects relating to that. Okay. And thank you for asking this question. Sorry, I don't have any chocolates. So here, one of the things what you have to understand is that, is it a rule-based approach or a principle-based approach? How many of you have understood what is rule-based approach and what is principle-based approach? Rule-based means it is a strict rule. Okay, for example, you pay 30% of your income as income tax. It is a strict rule. Okay, and if the principle-based, rich people should pay taxes. It is a principle-based. Okay. Let me give you what is the difference between this. I will give you 1 or 2 examples relating to that. Whenever it is always possible for you. So if you take the examples of the sensationalization, the 2 newspaper cuttings where I have given the initial slides where statutory auditor was arrested or internal auditor was arrested. If you look at, I had no access to their paper. Probably all of them were able to establish on a rule-based manner that we have done enough work relating to this, our obligations relating to the CARO or MAVO CORO, whichever it was there. Okay. But on principle based, they would have failed. Okay. I don't have any access. That is where it is maybe always possible that if you are rule-based, you might have done, that is on your records, you might have done an achievement. Okay, I have done all these things. I have kept all these documents and I have filed it documents. Anytime it is available to you. But whether what was the objective? Whether the company has a internal audit system commensurate with size of business. That is always a principle based. Okay. Let me give you one more example, which may be probably much more familiar with you, each one of you. This is an example where Duryodhana, when he brought the disrobing of a lady in the public. Okay. What was the logic? Did he violate any rule? Duryodhana did violate any rule, while he ordering a lady was to be brought to the middle of a crowd and she was to be disrobed. I want you to answer me yes or no. Did he violate any rule? Did he violate any rule? What is the rule he violated? That is principle. I am talking about rule. Did he violate any rule? So this was prior to our Indian Constitution. Okay. So this was you have to go back to the same time where this, those days, whatever the rule was prevalent. CPC came afterwards. So he did not violate any rule. He was always compliance with all the rules and regulations. What you said, the morals, the ethics, this is what he violated. Now you tell me, if you are the CBI person, if you are the person who is, ED or whichever the authority or a semi-regulator or a SEBI or any authority, if you look at the audit reports of any of us, statutory auditors or during the peer review, you find, you want to be the principle based or the rule based. So now the expectations, if you go back to the previous slide, what are the rules applicable to it? Is there any rules here? All of you were most of you were statutory auditors. Can you apply what rule on this? What rule you will apply? Is there any institute has come with any rules? Forget about ICI, which has the largest number of members. Is there any rule has come on this? IIA has come with any rule, or any other professional body has come with any similar rule? There are no rules on this. So it is a principle based. And what is the advantage of principle based? If you are rule based, probably you still have not achieved principle based. But it can never be the other way. If you are principle oriented, you will never violate any rule. So this principle, this example of Duryodhana's example, it should always be there in your mind. And what is expected in the reasonable assurance is that it is a principle based. Okay, not the rule based. There are no rules available on this. I hope I am very clear on this. So when you are principle based, what happens? Broad based standards in preference to detailed rules. So any law, when a rule has been made, all of us are chartered accountants, when we are taking a hat of as a tax practitioner or a company law practitioner or anything, we have been always able to find out the loopholes in such rules, and we have been able to argue, and we have been able to win such cases also, on behalf of our customers, okay, clients, okay. And when if it is a principle based, then you would not have been able to argue any of these cases. Forget about whatever may be the quantum of it. It is an outcome based regulation. So the expectation is that there is a governance framework under the Companies Act. There is responsibilities have been given for the audit committee, which consists of most of them independent directors. Afterward, there is a police authority has been given to statutory auditors. So a lot of responsibility has been given to us. Responsibility means all this responsibility, this authority, when it is given to us, it comes with a lot of responsibility. So that is the most important thing. So we are responsible, okay, to the society to ensure that we discharge these responsibilities very properly. Increasing senior management responsibility. So this also creates the moment it is principle based, we may have to do slightly much beyond the requirement under the law. Legal obstacles, still the moment you come into a rule based approach, minimum approach, if you start doing it, you can be always caught by the legality, lack of certainty, because it becomes very difficult to define how much ever do I do it so that I am still compliance of the principle based. Proliferation of guidance. Now everybody can give every guidance, okay, this is enough or this is not enough. So that is also a problem. Okay. Now the the responsibility here is expression of opinion. Okay. So you have to make an expression of opinion as per the expectation of this one. So it is a professional judgment which you all of us have to do. As a statutory auditor, it is the judgment, the expectation that you have to make these judgments for this one. And definitely all of us know that the materiality has to become. So Chanakya's days, it was always an absolute assurance, and now we are talking about a reasonable assurances, okay. Audit risk, all of us are aware of the audit risk where the materiality is not materiality in the financial statements. We fail to, report about a misstatement, that the probability of that is what exactly the audit risk. So while expressing the opinion, it is our responsibility to say that we make a proper by application of the mind. We make the responsibility. We have to take a reasonable care and skill. So this should be by after applying. It is not without. It is you have to apply your mind and the facts of those circumstances. Expression of opinion recklessly in complete disregard to the facts, because these last two things, it will ensure that you are always in the jail. The moment you do without these two, the last 2 points, without applying his mindset of the facts, or just by taking to thinking, or you just rely on the internal auditor, whatever he or she has done, and you rely on this, then we will be in problem. The last 2 bullet points. Okay. Now, one of the things when you interact with the internal auditor, so you also should look at what are the competency level of the team, because multiple things you have to look up the internal auditor. So one of the things is about the competency level of this one. So if you have I have a team of around 15-20 people. Okay. Now, if you look at the 15-20 people, there will be level of people, those who have basic awareness, those who are newly qualified, newly recruited, because most of the people with whom I have recruited, most of them are chartered accountants. There may be 1 or 2 qualified people, otherwise 1 or 2 specialist people. Okay. Now, the second level of competency of the people, what you are talking about is that the basic competence and knowledge is support from others. The team, what we have to evaluate, of the internal audit, there is a second level of this one. So those who are able to do basic competence knowledge with support from others. Independently competent in routine situations. So these are generally the people, those who are second in line to the chief audit executive, So this person is able to independently competent in routine situations. Now, what should be the chief audit executive's competency level? Okay. Independently competent in unique and complex situations. So he should never be able to be in a situation that he is not able to handle. Any one of you want to remove these chairs so that you are not able to see the kursi? So you are, I hope you are able to see even the last this one. So independently competent in unique and complex situations. So this is the expectation of the different competency level of the team of the internal auditor. So when you interact with the internal auditor, please ensure that you these are the different level of this one. And when you ask the qualifications and experience, you should be able to, okay, you have 20 people. You please put me in this bracket, these 4 level of people, how many of you have? Because finally it is a knowledge work, because internal audit is a knowledge based work. So you have to ensure that this one. So now this is the most important thing, which I have got 3-4 slides. How do you judge? I am not looking at the appendix 5. Okay. How do you judge the pulse of the internal audit, strong internal audit function happening in a company or not? This is where I want you to look at these things. Okay. First, when you have to ask for an audit plan, because audit plan is the audit plan which is approved by the audit committee, and what are the audit plan, whatever he has covered, he or she has covered. Whenever I am talking it is also covers the diversity of gender diversity. She also covers it. Okay. And what are the areas it is left out of the audit plan? This is something very, very important for you. So if in a company like us, it is placed in 180 countries, 300 offices, multiple products, 2 listed companies, and there are many unlisted companies, the auditor has to ask me, okay, what are your area? How are you doing audit? Whether you do it, in a cycle of, so if you ask me about 180 countries, do you do the audit? I don't do the audit of 180 countries. I have only a team of 20 people. Okay. And I have not outsourced also for the other countries for whatever it is. My entire across the globe, the audit is controlled from India, and we travel across the globe and we do the audits. Okay. So what you need to understand is that what is the whole overall plan, and whether internal control mechanism is sufficient enough. There is no rule that I have to do every audit every year, but there, if there are internal control deficiencies are there, you may have to do 10 times an audit in a year. That also can be there. So these are all the judgments which you have to make these judgments. Audit program coverage. So first one, you found out that after the audit plan, you need to ask what are the areas you are not covering. Are you covering in a, so my statute auditor, I always tell them that these countries I am covering on a 4-year cycle basis. These countries I am covering in every year. Okay. These are the countries where I am covering once in 3 years. These are the countries which I have covering in once in 5 years. So I give him that sort of list. And every year, because now they are the 4th year and 5th year, first year they invested a lot of time to understand these things, but nowadays they understand, and the reports also, whatever it is they come. And when they go and audit, they find that, okay, because of you are not done the audit, there is a problem. I want you to the audit, then I include it in the next year plan, though it has never happened that way. Then audit program coverage. So audit program is generally, we make the, what are the steps to be covered. It is generally based on a risk-based audit plan. Of course, we'll talk about that later. But that's the another aspect what we need to coverage. What are the areas you are coverage, not covering? Okay. Risk-based or cyclical audit. Now, our standards talk about risk-based audits. So can you just tell me that how many of you are uncomfortable with risk-based audit? None of you are uncomfortable with risk-based audit. I am completely uncomfortable with risk-based audits. Okay. Let me tell you the reason. What is the mechanism as an internal auditor? 37 years I have practiced as internal auditor. What is the problem of risk-based audits? Under certain circumstances, it work very well. And that we have taken as a standard. Majority of our companies, Indian promoters companies, are not matured enough to be run like a risk-based approach, because they, as promoters driven, how many companies where we have got promoters are not the managing directors, or they are not at the helm of affairs. There may be one Hindustan Lever, or there may be a few such companies, 5-10% companies, those who are there. All other companies, our promoters are involved in some way or other. So involving a risk-based audits, it may be, because finally, how do? You have a visualize that this is the risk in this area. This is the risk. Now, this is your feeling. Feeling and emotions cannot take you to an internal audit, or even to a statutory audit. And then you talk to a CFO. How much time he support you? Okay, these are the very clear. How much time he invests for that? For that. How many other internal control owners? Because we believe that strongly that the internal control is the responsibility of the process owners. Okay. How many of you strongly believe that can be, you can see in the company? We talked about the governance. It is the same way. On theory, it is all right. Okay. So I am not a strong advocate of the risk-based internal audit unless the environment, like Hindustan Lever or any other company, where they really feel internal control is their responsibility. So you should be able to sense that sort of thing. So cyclical come risk-based can be a better approach, because so you cannot be, this is based on Indian, but if I am in a USA or in a European environment, probably I will go for the risk-based approach, because their maturity is a different this one. Okay. So don't go blindly by what is written by this one, because finally you have to make your own judgment what is appropriate for the setup. Data analytics tool. Most of the internal auditors today, they don't have data analytics tool today, unless and until you have, if you expect that they need to have this one, they should have something like an idea or ACL or any similar tool. I'm not here to advocate any specific rule, but if you see that, what data analytics tool, earlier it was all sample based audits. Nowadays it is not sample, because you are able to, with a data analytics tool, you are able to, take most of the data in this. Continuous control monitoring. That is another things which you should be able to do this one. So because it is not the expectation is that the audit should happen at the speed at which risk is happening. Internal audit should happen the speed at which the risk is happening. That can be only done when you have continuous control monitoring tools. It cannot be done otherwise. Fraud indicators, previous speaker talked about that, internal audit standards used. The expectation is that, though I know that the standards are not mandatory and other things, there should be some clarity of thoughts. What are the standards we are applying? What we are not able to apply? The chief audit executive, when you are as a statute auditor, when you are discussing with the internal auditor, he should have some thought process. Okay, these are the standards which I am able to apply. These are the standards. Okay, I have a road, because it is always a journey. It is never a destination. So he should have very clarity of the thought on this one. In-house capability for specialist areas like IT, GCC, foreign exchange, etc. ITGC stands for the Information Technology General Computer Control. Sometimes people may not have the capability to do it. Most of your systems are in there. This presentation will be there. You don't have to write. The presentation will be shared with the WARC website. Mein ye milega. Nobody has to write it unless you specifically want. You for questions and answers, you can always ask me on this one. Okay. So it is expectation is that you should have the so if you don't have in-house capability, the chief audit executive should have the authority to hire the relevant people from the market and see that these things are being done. Otherwise, you have to, all as statutory auditor, you need to have all these additional test of controls you have to do before making an organization positioning of the internal auditor. Many of the internal auditors are reporting to CFO, they are reporting to many other people. No, their independence will not be there. So the internal auditor has to be positioned organization. He should be able to exercise that independent authority. Okay. He cannot be fearful of, if he is reporting to CFO, he will be automatically fearful about the CFO. He will not be able to do that a proper justice to the internal audit function. Okay. All these things, now if these things are not happening, you have to make your additional test of control as statutory auditor. That's all what is expectations. Okay. And then when you talk to the internal audit as a audit committee, because you always get a chance to talk to the audit committee and the board, at that time you should bring up all these issues. It will make 90%. Everybody is not all cargo logistics or everybody is not Mukundan. There are 90% of the people are in this category where they don't have that ability to bring up, because their organization positioning itself, they are reporting to say CFO, and that sort of things. So that's not the right way of reporting structure. Okay. Outsource areas, coverages, and accountability. If there is nothing wrong in outsourcing internal audit, whether they are able to do it, because most of you are practitioners, and internal audit outsourcing can always be done provided you achieve all these things. Even if the complete internal audit is outsourced, if you take the responsibility as a outsource internal auditor, this responsibility, and this way you are part of this one. Don't go for as an internal auditor. You work from your office, go as an internal auditor, come with a presentation for the audit committee. Then you are not part of that outsource auditor. You need to have, when the statute auditor is talking about, you should have the complete responsibility relating to that. If it is just given some area, probably that doesn't help. Sorry. So it has to be decided by the chief audit executive in consultation with the audit committee. Finally, as a statute auditor, you have to see he is covering the entire universe of the particular company, where he is able to say that it is in accordance with the size and nature of the business. You have an internal audit system. If he or she is covering, because I am telling you the multiple instances of which I have heard about it. There was one of the promoter, this one, these are all overheard stories. Okay. It is very expensive to run an internal audit department. People are coming, recruitment, and afterward they need laptop, they need sitting space, they need this one, and then they will come with all this problem, people turnover, training, tools, so many things expensive. So one of the very respected industrialists is talking about, तो वो मैं 40 लाख रुपए में इसको ऑडिट को दे रहा हूँ, इंटरनल ऑडिट दे रहा हूँ, उसका काम है, वो 40 लाख में करेगा. Now if this is the setup of the owner of the company, it is a listed company. Okay, you can just imagine that what will be the fate of that internal auditor. This is where the statutories have one of the power. So both statutory auditors and internal auditors work together, and finally, where the purpose is enhancement of the governance of Indian government in India, our corporate structure. There is a purpose for which all of us stand today. That is where the winning of the ICA, the respect what we get today, is only because of we stand for the governance. Okay. Involvement of process changes. Many processes undergo changes, and it is interest that the internal auditor should be involved in these things. Test of design and test of effectiveness. All these things are there. Internal control responsibility. As I talked to you, the example of say Hindustan Lever or any such company, each process owner should feel that he is responsible for the internal control of his area. In most of the other companies, it doesn't work. And the sign of that, repeat audit observations. So same audit observations are repeated, internal audit observation. So it means that that person of that particular area, it may be a CFO area, it may be a production area, HR area, or sales area. It means that they are not taking any internal control responsibility. Compliance and follow-up. How many observations are being complied on time, agreed upon time. So this is another benchmark for you to judge that whether internal audit is effective or not. Proportion of manual and automated controls. most of the controls, because in today's area, whatever the controls are there, these are built up on the applications, the information technology applications. More automated controls, you have to just test only once, and that will automatically ensure that these things are there. Whistleblower complaint, this is not what, but more and more whistleblower complaints means your internal control systems are not working satisfactorily, your internal audit system are not working satisfactorily. This is things. Okay. I am still continuing in the interest of time. Automation of internal audit administration. How many of the internal audit departments have automation? So today we use an investment not only on a data analytics tool. Each the tool is coming. And now you just, whoever is the internal auditor in this audience, let me tell you that each SFIO works, because there was a slide on the internal auditor was arrested. Okay, arrest can be done for anyone. Okay, so if an SFIO walks into your office for the 8 years record or 10 years record without a proper automation, you will never be able to ensure that these things are not done. So audit administration is then access to the information, how quickly he's access to information, qualification of internal audit team members, training internal and external. Between one of the important area for us is that how many of we upskill our, this one after the qualification of the CA. At the age of 23 or so, I qualified as a CA. My suggestion to each one of you, please get into the different skills, after upgradation. Our biggest problem is that, I am also part of the same system. We don't learn further. Learn means, and learning is also not only by the CPE program. Let us appear for the examination. ICA is conducting multiple certification courses. Why don't we go for those courses? Between the age of 40 and 50, okay. After the qualification, the Murtuza talked about, I appeared only for between the age of 40 and 50, 3-4 qualifications. I'm not boasting about me, but that has given me a lot of value. So I'll definitely urge each one of you to do it. Evaluation of IA by an audit committee. This is also one of the activity, because you should look at the minutes of the audit committee where these things are there. Participation in governance activities like business review, MIA circulation. If the IA is positioned properly, they will be participating in the governance activities of the company. Business knowledge. You see, there is nothing called, because many of us think that, we come from a finance background. I can tell you that I work in a transformer manufacturing company. So I go to the production manager, what to understand. The basic science, whatever up to 10th standard, whatever I have studied is enough for me to understand the basic common sense approach for that. I never said that, okay, I don't want to do it. I go and sit with the production manager, whether it is oil rig manufacturing company, and that is enough for us to, because the knowledge what we need is only for auditing, because we are not going to be the CEO of that particular division or particular product, So that is, so never ever hesitate to go and sit with them and understand. Your basic up to 10th standard science and knowledge is sufficient for even for the technical matter. Sometimes 3 lines of defense is a very, very, lucrative, very, very fancy word to be used, but many times, it may not work in the way in which under the Indian setup. Is internal auditor trusted and valued? This you should get the pulse from the company. Okay, if he is trusted and valued, then means he is doing a good job. That is this one. So I'm not, running any these things. This is the way in which this one is the transform. The last one is that Chat GPT, because all rule-based activity Chat GPT can do it. Within 15 minutes, all the internal audit reports can come, audit plan can come, audit program can come, audit reports can also come. Okay, 15 minutes throughout the year ka kaam pura kar sakte hain Chat GPT. Okay, so they all will be rule-based. It will never be principle-based. Okay, so probably Chat GPT may revolutionize maybe after some time. I don't know about this. I am not running through these slides in the interest of time. Now, all of us talked about the audit risk. Now I am talking about the internal audit risk. Okay, so when you are relying, when you are certifying that internal audit is commensurate with the size of the company. Okay, I am talking about this. Okay, absence of any framework. आप ऑडिटर के जाते चीफ ऑडिट एग्जीक्यूटिव जाते उनको तो मालूम नहीं है, अच्छा स्टैंडर्ड्स हैं, ठीक है, कुछ स्टैंडर्ड्स हम फॉलो करते हैं, कुछ नहीं करते, आप क्या फॉलो करते हैं नहीं, वो भी मालूम नहीं है उसको. He doesn't have any idea of this or that. Okay, capability of the people, there are nobody of CA तो हैं. Okay, CA may be, because you will find the exposure and experience, what always matters relating to that. If you don't have enough experience, then there is a problem. Absence of business knowledge. They have never gone out of their air conditioned cabin. वो factory में कभी भी गए नहीं है, manufacturing कैसे होता है मालूम नहीं है, कभी भी नहीं होता है. Okay. Only paper में देखा है. Organization positioning of the internal audit function. If they are not appropriately placed, it is this one. Quality and peer reviews. this is not only applicable for the statutory audit, it can be voluntarily, it can be done for the internal auditor. There are other people who can do all these activities. Specialist engagement, where does he has an authority? If he doesn't have an authority, this is a risk. If he cannot get an ITGC person or a foreign exchange, if there are no data analytics tools available for him, that is also again a problem. Retention of records. If he doesn't have any tools relating to the retention of records, that is also a big problem. Okay. Outsourcing and insourcing decisions, whether these decisions are taken by him or anybody else, that is also a big problem. Okay. Levels of maturity. So this is where whether internal auditor is a trusted guy or not. That is what is this one. Alignment among the stakeholders. So one of the biggest problem for this one, I talked to you about what are different stakeholders. Audit committee wanted everything. Expectations are very high. When the internal auditor needs a support, a resource, a budget for a software or a human resource, if that support is not getting to him, then definitely it is not this one. So these are the things which I wanted to talk to you. I think capability building and he has to earn a seat. There also has to be capability in the internal auditor to earn a seat. So these are the things which I wanted to talk to you. I think slightly I have run out of time. So I just, how much time we have for the questions, I don't know. But, otherwise, whatever it is, I love to talk to each one of you. Thank you very much. Appreciate your time. Yeah. So within, if we have one or two questions, we can, otherwise anyway, I am here for lunchtime. Any questions? Yes. If somebody can give a mic to him.
We can take 5 or 6 questions if sir allowed.
Yeah, I don't have any problem. Any number of questions, I was only concerned about the time. And whosoever is asking question, you are adding a lot of value. Let me tell you, I am also going to learn a lot of things.
So, nice to see you smile so well.
Thank you.
So, one question. In today's time, if you have to benchmark, what should be my cost of audit function to the total cost or maybe revenue? That is one part. And second, how does it compare to the fee paid to the statutory auditor? Can there be some ratio which I
So let me answer you the second question first. Yeah, absolutely. Second question first, let me answer you that there is no relationship between the statutory auditor's cost and the internal auditor's cost. Okay, that cannot be anything. I mean, I have not heard about it, and I don't think there can maybe any surveys would have happened, but I don't think it is worth comparing. It is logical to compare the fees of the statutory auditor with the internal auditor.
Budgeting perspective, not in judgmental way.
Yeah, so I'll come to the first point what you asked. Probably that should answer the question. So what has happened over a period of time? The productivity has significantly improved because of the investment of the software tools available, the skill set available, and this one. So internal audit today, when I ask the audit, so many of the audits of many of the parts of the world, I do it by sitting in India itself. So when I started long ago, I used to spend 2 to 3 weeks. So my first audit in 2011 January, I did in South Africa. South Africa as a country, because each country is an audit universe for me. So at that time, it has taken about 2 to 3 weeks those days. 2011 January or February. Okay. Today, I hardly I spend less than a week in South Africa, and the number of resources deployed there also South Africa is also. So I do a lot of pre-work by sitting in India, and after coming back also I do anything. So I do a minimum field work only in that particular the country. And earlier I used to do only sampling with a lot of tools available today with the continuous control monitoring tool, as well as the fraud indicators, flags available to me, and data analytics tool. Today I do coverage the almost 100%. So though I tell the auditee that I have done only sample work, effectively I know that between me and my auditor, I know that we have coverage almost 100%. Most of the risk-based areas, not that every area which has been covered. So if the percentage of the fees, the expense, because there is a survey conducted by the IIA on this particular matter, it comes to 1 or 2% depending on this one type of the industry. Each industry they have come with this one. Probably IIA has this one, but it is a paid publication. There is a benchmark available on globally on this particular, and it also depends upon the, for example, in USA, when I was part of one of the big 4 accounting firm, and I was part of the USA activity. My level of, I think they were charging about $300 for the customer for the client, you know. Now from that point of view, this I'm talking about way back in 2005. Okay, so $300 was a huge money those days, you know. But today, if you do it, you know, in an Indian concept, $300 cannot be per hour cost of a chartered accountant. Even the experts are experts, the best experts also on this, unless you are too high level of that expert. So fees, the expenditure what we incur on internal audit, there are benchmarks available for each industry, and you have to go by that. I will not be able to give you one answer that it is 1%, 2%, or 5%. But this is available in the IIA website. It should be available. It's a paid application. Yes, we can go to the next question, depending upon time available. Yeah.
I think there is no questions. So I guess there is no any question because sir has explained in depth about the essence of internal audit. Actually, what the sir say कि coverage देखना बहुत जरूरी है. In one of the instance ऐसा हुआ था सर, IAS ऑडिट में भी ऐसे ही हुआ था. जब हम फीस कोट करते हैं ना, वो क्लाइंट बोलते हैं अरे ये इतनी सारी फीस है, इसमें से ये स्कोप निकाल दो, वो स्कोप निकाल दो. एंड व्हेन द स्टैट्यूटरी ऑडिटर विल गो देयर, IAS ऑडिट मैडम होके रखी है, इंटरनल ऑडिट होके रखी है, बट उसमें से तुमने क्या क्या स्कोप निकलवा दिए वो हमने देखा ही नहीं. ऐसा हो जाता है. तो सर राइटली सेड बाय सर कि अपने को सब वी शुड चेक कि उसका कवरेज क्या है इंटरनल ऑडिट का व्हेन वी आर गोइंग फॉर स्टैट्यूटरी ऑडिट. कि पता चला मैन पॉइंट ही सारे निकाल दिए कि नहीं इतने फीस हम पेमेंट नहीं कर सकते, तो आप ये कवरेज निकाल दो. तो अपने वी हैव अ गाइडेंस नोट ऑन आल्सो एंड वो SAP ऐसे आल्सो कि वर्क रिलाइंग ऑन द वर्क ऑफ अनदर ऑडिटर. So we have to check that also, sir, for that. So for this, I want to formally give vote of thanks to Ankush Gupta. Please, Ankush.
Mukundan sir, I would like to say something very on a lighter note with your permission. I hope you are giving the permission. We both have, 2 to 3 things in common. We both are short in height. We both have a liking for internal audit. But today you proved something that good things always come in small packages. So you have done a fantastic job, sir. Assurance, and that also in internal audit, is itself a vast topic. And it is very difficult to sum up this thing in 1 hour or 1.5 hours. But sir, your knowledge and your practical experience about this field, you covered all the major areas. And I hope the colleagues, professional colleagues, we all are satisfied. At least we have learned something. At least we got some level of assurance from your lecture, sir. So, sir, on behalf of everyone, I propose a hearty vote of thanks with a huge round of applause, sir.
Now there is a lunch break of 45 minutes. Please be on time. We have to start our next session after that. Thank you.
The topic is increase in responsibility and liability of board members. And it will be delivered by CA Rajdeep. As please welcome him with good big round of applause. I invite you, sir, come on the dais. I also invite CA Laliji, please come on the dais. It is my pleasure to introduce today's second session speaker, CA Rajdeep S. He is a partner, MZ SKC LLP. He is also All India ranker, rank 31. He is also LLB, CMA US, CMA India, CFA US level 2. He had 18 years of professional experience with PwC, KPMG, Deloitte, and EY. In statutory audits of BFSI, manufacturing, real estate and hospitality sector in India, UAE, Bahrain, UK, and US. Rajdeep was also involved in leading various SOX assignment and regulatory investigation and review assignment of special nature in Deloitte, UK. His core area of expertise in IND AS and IFRS. Rajdeep was instrumental in testing and launching the audit tool software globally during his professional career in Deloitte, UK, and EY in India. Rajdeep has been associated with the ICI in mentoring students and facilitating sessions at various GMCA seminars conducted by ICI. Rajdeep has also been involved in firm-wide training courses and presentations in London and in India in the Big Four for 11 years in the area of audit, methodology, and other soft skills, including project management. He is also driving the firm's quality assurance program and leading several training and presentation courses and initiatives across the firm on the pan-India basis to ensure audit quality on every engagement within the firm. With this brief introduction, we welcome CA Rajdeep S. I request Chairman of WRC kindly come on the dais to present a memento to, and Pinky ma'am, please.
It's the wrong time. It's a good time. It's a good opportunity. Hello, good afternoon, everyone. Good afternoon. It's the wrong timing for the session post lunch break, but I'll try and make it a little bit interesting, more interactive, hopefully, and to the extent we'll try to focus more on the discussion aspects, the pickup points more than the theory. Okay, so welcome to the session, everyone. My name is Rajdeep Samudrala, and I'm here to take a session on increase in the responsibility and liability of the board members. Obviously, very challenging topic, and it's very important today because of the amount of ownership, corporate governance that's happening in the recent times. So the onus is now not just on the auditors, but the board, and obviously it's always been on them. So I want to look at how we analyze the increase in the board responsibilities and obviously the ownership, the liabilities that they have to take on, obviously as per the Companies Act and the other regulation and governance. So let's start straight away. Now, basically the broad contents, looking at the overview, governance. I'll pick up on independent directors as well, and committees for the discharge of the responsibilities, and then we'll go on and touch upon all the duties, liabilities, and the additional responsibilities. Right. So broadly, before we start, obviously you all are aware, but it's important to put the context. Who exactly is a director? Obviously, it's a director as any person who appointed, but as for Section 234 of the Companies Act. Now, every member appointed to the board essentially will be termed as a director. Some companies have fancy names like directors and CFO. It's not those. It's those people who are on the board of the company. And the board is further defined under Section 210 as the overall body, which is governing body. Together, the people who form the body of directors will be called as a board. Now, essentially, we understand that this board has the rights, has the power, is being chosen by following the procedures outlined in the Companies Act. Now, you're aware that it goes to the articles of memorandum and the association. It is empowered by the company's framework. So when you look at a board, essentially, why it's so important is because, like, the company is owned by the shareholders, but the board runs the show. So the complete disconnect between who's owning it and who's running the show. So it's really important to ensure that the board is not just competent, but also is the right body that is running the company in the interest of the shareholders. Okay, so it's really critical to ensure that we don't just give them power, but we also give them sufficient responsibilities, liability, and accountability, because that's what should flow with the power that's given to a board. Right. So broadly, what is the need to actually have this accountability and liability onto the board? Now, obviously, the board has oversight on the operations. They have a detailed oversight. They have to ensure compliance with legal framework, accounting, reporting systems. They have to ensure that the compliances take place as a law, with the regulations, with broadly every spectrum of what a company is operating under, right? So when they are discharging this function, there is some level of discretion that the board will have. And that discretion obviously will be various. It will be subject to your judgment, your subjectivity, your experience, and the situation. So that discretion will also involve the potential ability to probably go away from the way it should be done to doing the way you feel it should be done, right? And that is where corporate governance seeps in. So corporate governance will ensure that while the board has the discretion to work within a framework of rules and responsibilities, they also make sure that there's adequate governance, accountability, and oversight on the board of directors. So no written rules can really define how people work, but obviously we have to make sure that these written norms are being followed, right? So just written a bit about how the behavioral norms can bring about informed deliberate actions, right? But what is our responsibility, and what the Companies Act has very well done is, it has prescribed a proper basic framework whereby companies can ensure that they are complying with the framework. At the same time, they're working in the interest of the company and the stakeholders. And that is critical. So while you might be following the rules, the law, regulations, the norms, you have to ensure that you are still within the framework of the interest of the stakeholders, because their interest comes first. So the broad regulation that the board is mainly governed with, obviously, is the Companies Act, which you're all aware of. The memorandum and articles also govern a lot of what their powers, restrictions, and all are. And obviously, any other regulations made. So there can be some regulations that the company has internally passed, which will probably prohibit or restrict or not allow them to do something. Example, you can't sell the assets, you can't sell you can't invest, you can't put your other stakeholders, you can't have related parties. So any other regulation that the company has passed through the process would also be governing the board of directors. So it's important to ensure that we understand that there are various oversights and restrictions on the board. They can't do as they please. Before we go on, I just want to touch upon the concept of independent directors. Now, while responsibility of board lies in doing the things as per law, but within the board, there are planted additional people in the form of independent directors who are there to ensure that the board is well balanced. The board is not running the show. The board is not doing things in their own interest. So here we have people who are independent of the entire process, who will be sitting on the board and balancing the interest of the various members and not allowing it to go in one direction. So this was a very important requirement, which obviously has been given more importance in recent years under the Companies Act, where they've said that the presence of the independent directors, obviously the first objective is improving the corporate governance, and second, bringing an additional element of objectivity to the board, because this person will probably sit from outside and observe and give an independent objective view, which will help in that. Yeah. Sure. Yeah. Can we take at the end? If that's, shall we take at the end? Okay. Yeah. Yeah.
But in a corporate world, we always say that authority and responsibility go hand in hand.
Right.
So well-defined responsibilities for independent director, but could you share what kind of authorities they have?
In
Thank
terms
you.
of, yeah, okay. So obviously you heard of the dialogue, with great power comes great responsibility and authority has to have responsibility. So obviously I've touched on how the independent director has a responsibility to make sure that they are not letting that run. But the independent director has the same authority as all the other board members in that room in the board to take the decisions. They don't have any lesser power. But obviously, like a MD or managing director or someone, they would have the executive functions. The independent director is not involved in the day-to-day functioning and the executions. So there his power is limited. But sitting in that boardroom, that independent director has the power to challenge any of the actions of the board and get a rationale behind it. When they go to voting and other things, the independent director would tend to have the equal voting rights with all the board members. So the only purpose of him being an independent director is he can give an objective opinion and not be involved. For example, a managing director might say, "Chalo, I want to increase profits." So some decision he takes might fraudulently increase or change. But the independent director has no stake. He has no incentives. He has no bonus. He has no ESOPs. So he is not concerned with whether his decision will affect the company's financials or fraudulently. He is independent of whatever the decision the company takes. But his role is to ensure that he brings that intelligence, the knowledge, and the independence to a table, which will allow all the board members to also try and think independently. Obviously, the number should be big enough. We can't have one person sitting as independent director and the others are bullying him. So therefore, the requirement also says that we need to have at least, sometimes it's like 2 or 3 or 1/3 of the board should be independent directors. So they have the power to vote equally with the other members. They have the power to rationalize. They have the power to challenge an action if they feel it's not in the interest of the members. And obviously, they have the power to resign if they feel it's not going in the right direction. And resignation of any director, especially an independent director, is taken upon very seriously. Yeah. Of? Right. Right. Correct. Yeah. And obviously tomorrow, if there's something that has been found out against the board, the independent director would also be liable. So he will ensure that should be. Yeah, it's rounded. That's true. Yeah. Thank you. So we'll continue. So it's interesting because, I mean, of late, I mean, earlier, I think 5, 7, 8 years down the line, independent directors was never something that was even used. It came in UK, then US, and then India Companies Act. So it was a huge move and it actually helped a lot. Even women directors came across later on where they had the need. So all these actually improved the governance through an objective set of eyes, which earlier was not existing. Okay. So like I said, to ensure that the number of independent directors is not too less, they should be able to call the shots. In the sense, challenge the directors sufficiently. The requirement is 1/3. 1/3 of the directors should be independent directors so that there's sufficient oversight. And obviously, it's based on companies that have public interest. For a smaller company, they require lesser, but obviously we're looking at mostly listed companies. And this is whether or not the chairman is executive chairman or non-executive. Now, how is he appointed? Obviously, he's appointed from amongst the people. Now, it's important that you understand the independent director should be someone who is of integrity, expertise, and experience. So these appointments are not just made arbitrary or by thought. There is a specific criteria to be met. And if I'm not mistaken, this is unofficial, but obviously not as part of this act, but there are exams we given. There's a criteria to be met. Once you become eligible, then you can become on the board, you can be appointed. So before appointment, you have to meet all the criteria norms that are set by the various acts, and the exams have been passed. You have the experience that you can boast of, and then you can be appointed. So that's the mode of appointment. And obviously the appointment has to be ratified and approved by the governing authority. Now, this will give you a summary of what exactly he does, which I've discussed, but broadly, it is objectivity to the board. He also can scrutinize the performance of the management in the goals, looking at whether the goals are being met, balancing the conflicting interests among all the stakeholders, safeguarding. And the last line is very important. They are also involved in determining the remuneration of the executive directors, KMP and senior management. So since they're not interested in and directly in the running of the show, they are the people who will be charged with determining what is the remuneration that is appropriate for the people who are on the board and running the company. So KMP, senior management, and the board, obviously. So that's a critical thing, which obviously their contribution will help in making sure that there's oversight. Now, moving on to directors and alternate directors. So the total number of directors, just a quick insight before we go into functions and duties. So there's a maximum limit of 15. Obviously, this limit can be increased, but certain resolution will have to be passed. But now it is 15 directorships anyone can hold on. Okay, which is important so that you're not overburdened. But obviously, you'll look around all the names of the industry, all the big names would have already passed 50 and waiting for one of them to reduce. If they want to take over 16, they tend to have to remove one or wait for the resignation. Now, you can be appointed as alternate director in a company if obviously in place of another one. You cannot be an alternate director for more than one director in the same company. So you can be an alternate director in place of another director, but just one. You can't replace more than one director. And obviously an alternate director can be also an independent director. May be allowed to be appointed for an independent director. Okay. Lastly, the liability structure. When I use the word director, be it alternate, independent, or any director, they all will have, to answer a question, similar liabilities and similar rights. So we don't distinguish between directors. Obviously, the word executive and non-executive is different. Executive is running the execution of the company. Non-executive is the person who comes only for the meetings. But I personally have, when I attended meetings with directors, I've actually found the contribution of non-executive directors to be the highest, the most, and it's mind-blowing. You'll have, say, Shailesh Haribhakti sir, you'll have the Tatas and the big names who come for these meetings. They will contribute to such an extent that even the executive directors are like, okay, we didn't think of that angle. But obviously it's because you're closer to the show, right? So we need that oversight from independent person, which is where the focus is shifting now. You'll see companies which have the big names as their non-exec directors are the companies who are doing well today. And those are the trusted lot because the governance that comes from those non-exec and independent directors is much greater because of their presence. Okay, so just a thought, and obviously that's where we also tend to get our audit reliance and comfort as well. Now, to discharge these additional responsibilities, I won't pick up all the committees because you all guys already know it and it's not needed, but I'll pick up on 3 or 4 of the really important critical committees which help the board to discharge the added responsibilities under the Companies Act. Obviously, the most famous one everyone knows is the audit committee. I'm sure all of you at some point have either attended it or prepared for it as an auditor. So audit committee, what do they do? Financial reporting, it looks at the accounts and is in charge of the financial reporting framework and responsibilities. Here the chairman should be independent, obviously, and at least one member should be having the knowledge. So it'll be an MBA finance or a CA. Most probably is going to be a chartered accountant. The chairman would also be required to attend the AGM, and surprisingly, but importantly, the recommendations of the audit committee are to be taken up by the board. They cannot be overruled. And if they need to be overruled, they'll have to have it separately disclosed, which I'm sure no company will want to do. So audit committees are basically, the most important eyes of the board, because that's where the interaction between the financials, stakeholders, the shareholders, and obviously a challenge to the audit process and the numbers happens. Clear? I'm sure all of you have that experience of the audit committees, and obviously you'll know how difficult it can be in terms of the challenge they have. Now, the next one is a NOMCOM, REMCOM, we call it the Nomination Committee, Remuneration Committee. This is another important committee of the board, which looks after, obviously, Firstly, the nomination part, who is nominated to the board, the right people, the right experience, you have to have that. So the separate special wing. This ensures that the directors appointed have not only the credibility and the integrity, but also the knowledge, the experience. So they are like our headhunters. They'll headhunt the board directors and they'll make sure the best ones are appointed. Obviously, the remuneration. So I've written a few on board recruitment, succession planning, evaluation, induction, training, all the things that a board needs to be well aware of. Now then we have the stakeholders relationship committee. Now this is a little unique, but I picked up because it's a committee that is in charge of stakeholders relationship. You won't find the smaller medium-sized company having it. It's mostly the bigger ones having at least 1,000 plus shareholders, debenture holder, any other security holders. Obviously, the main purpose is to make sure that all our stakeholders are sufficiently satisfied and there's no grievance that's not been addressed. Again, the paramount importance is our stakeholders. So to ensure that they are being satisfied, approval, review, grievances, the mechanisms in place, this committee makes sure you do that. Okay. You guys know there's a debenture trustee also. When you have debentures, there's a proper debenture trustee which looks after debentures, redressal, grievance. Same way the stakeholders relation will look at the grievance of the shareholders and the other security holders. Sorry? Yes, would handle this part. In fact, the company secretary would also give a report on how effectively this is done. So now today, in the light of these responsibilities, the company secretary has a much bigger role. And it's a much more popular skill that's needed. The last one is called the CSR committee. You all guys are aware of. Obviously, this is something which has changed a lot in the last 2 years. You know, the new CSR regulations and act and the new requirements. This committee takes care of all that. Critical, and off late, it has been getting a lot of importance because you have to contribute your 2.5% of profits for CSR. So who takes care of all that? CSR committee. Which companies? 500 crores turnover, same turnover 1,000 crores, 500 crores of net worth or profits of 500 crores. Again, the committee should have directors and one of them should be independent. But what's important to focus on is the responsibilities. What are the responsibilities? Formulating the CSR policy, which is in line with the Companies Act, recommending the expenditure and monitoring the policy from time to time. See, CSR is one area where actually there can be a lot of, what you can say, hassle, things are moving around. So that's one where you have to have a committee that oversees the act policies. Yes, sir, go on. Yeah. Yeah. I think it's 500 only, you know. I think I put a, okay, I'll pick that. I'll change that in the final slide. Thank you. And the committee, yeah. So the profits is a different criteria. Okay. So obviously the CSR committee also has the CSR limits, the profits has to be paid. If you have no profits, then losses you don't have to do. So those are separate criteria, but this committee is required if your net worth is 500 crores. Then the payment is based on the profit of the company. Okay. Now we'll come to the real chunk of the matter, which is the duties of the directors. Obviously, I've been talking about how the duties are augmented and discharged by the various committees. Now let's come to real duties that they're doing, which is done through all these eyes and organs of the board. Now, why are we harping on this? Obviously, you know, in recent times, the Satyams has happened, Sahara, Kingfisher, and all these scams and scandals have focused on one thing, that we need a stronger corporate governance. I mean, this is still a little older, but if you see recent times, you have the recent cases, you have the Yes Bank, Yes Bank was a classic case where corporate governance was a total failure, right? I mean, if you see the board, that is one example where if you actually see the board was literally run by one person. And it was actually something which had given a red flag, but it was never observed because that time it was not so stringently followed. I'll say it was years back, probably then the new regime kicked in strongly. So how can that, I mean, that oversight be missed out? And obviously when the scam unearthed, it turned out that money was pushed to the three companies of the three daughters, and there was a lot of evergreening happening, and all of that got exposed through the control of one person on the board of directors, Rana Kapoor. So while you read this further, you'll realize that the need for corporate governance for oversight on board is really important. He didn't have any independent directors much. If you look at the Yes Board governance, they were more of probably to an extent with it. And obviously there's a lot of resignation that took place later. So all of that shook up the way it's actually being mandated. So is it on paper or is it being followed in principle? That's what we should question ourselves. So obviously every time the directors are truly responsible for failing the stakeholders, you'll see every time scan happens, the directors tend to resign, but they get caught in an investigation. But they have to ensure that that accountability, that self-regulation is being maintained by them at the level. Now, obviously, the 2013 Act, which came, I think, quite enough as Satyam other cases, has tried to make sure that all of these directors' lapses are taken care of through stronger regulations, which are not just imposed, but which are self-regulated. Okay. Now, the primary section that you would probably see is section 166, which talks about the various duties, but obviously ensuring that it's working in the interest of the shareholders. Now, section 166, before I start, please ensure you understand it applies to all the directors, including the independent director of the board. Before I go there, you'll be just a slide on showing that basic duties always was direct the affairs of the company and put control in such a manner that the company's assets are protected. That was always what it was meant to be. And obviously duty of care, diligence, power and good faith. But what the Companies Act did is instead of harping on jargon and, rote, it went to defining clear categories of responsibilities. One, what are the roles, responsibilities and obligations that will bring about corporate governance? That's important. And this should be through the efforts of the directors and making sure there's quick resolution. And obviously, second, how do we ensure that the directors put the company's interests ahead of their own? Okay, so fostering corporate governance and bringing about a culture of putting companies' interests before self-interest, which everyone knows is difficult even today, but we have to ensure the act is followed in principle. So some of the key duties that come out in this, obviously, compliance with the articles. Like I told you, that's the base. That's what happens. That's what is followed. So every director is bound to be in compliance with the articles, which could be anything, shareholding, related parties, could be all of that. Make sure that you're not involved within the RPTs and so on. A director must act in the best interest of the company's stakeholders and promote it in good faith. Impartial judgment in carrying out responsibilities, should always be mindful of potential conflicts of interest and strive to protect them. Before authorizing RPTs, the director must ensure that they'll be having taken place and the transactions and the company's best interest, and to ensure that the vigilance systems and users are not harmed as a result of such use. So I'll stop here for a minute. I know there'll be some more duties, but broadly, what this act went to achieve is the directors can do transactions with anyone. They can be related also. But when you're doing it, ensure that you have taken sufficient amount of deliberations, discussions, negotiations. The interested director is not involved in the voting. So ensure that all the processes followed so that you can still get the best deal. I mean, who said that a lay party is not going to be effective? He can be efficient, but ensure that the process of the law is followed and you're disclosing all of those transactions, obviously, as per the law. So the need for over disclosures, for disclosures of all these also has increased, which is helping enhance the corporate governance of the company. Now, directors know that whatever they do, they have to disclose it. So in that way, they are always being kept in check. And this is a huge part of the increased responsibilities of all the directors. Today, they really can't do much without being noticed or observed or caught in the process. Clear? The second part of duties on the same section, Confidentiality of obviously proprietary knowledge, business secrets, unpublished should be maintained unless the board has authorized. He cannot appoint his office or any other such assignment. If he violates, he'll be fined by obviously 1 lakh, which is less amount, but there's a fine. And the company had also assigned different roles to independent directors to ensure the independence and fairness. And also definition is who does not hold any stock. Now, it's important that the board is not disclosing anything to the outside, which is confidential, and obviously at the same time not profiting out of it. So insider trading, confidential information, breach and all are being covered, are being tracked and ensured that they're not being defaulted at the board level. Obviously, a board is the only person who probably know almost every secret of the company and information. So that is being this. I mean, of recent time, you'll see there's no such scandal or information where the board has actually profited from confidential information. So that part is well taken care of. But why? Because the Companies Act is putting stringent measures on the actions of the board. Clear? Lastly, protecting and promoting the interests of all stakeholders. There's a lot of impetus being given to minority stakeholders because very often you realize that they are the ones who probably would not get the best deal. So all, including minority stakeholders' interests, should be protected. There should not be some resolution that are passed against their interest. So all of that they're saying, obviously you're aware of the NCLT as well, the Honorable National Company Law Tribunal. That also has given a lot of power to the minority stakeholders by protecting them, by passing orders or verdicts which are going to protect them from being exploited or going against by the board. So all this is there to ensure that the stakeholders, especially the minorities, are being protected. If any conflict, the board, the directors have to act as a mediator, assist in delivering a fair decision to the board of directors. And this is mostly from the independent directors. Adequate attention to transactions between related parties. This is coming time and again, but obviously, as auditors as well, we often look with a microscope on every related party transaction. Okay, and any unethical activity, code of ethics breach or alleged fraud in the company should be reported honestly and impartially. So all of these become very critical and they have done a lot to increase the liability and responsibility, but obviously this is not enough if there are no sufficient penal provisions that can be going against. So I think a bigger part of this is ensuring that action is taken immediately and quickly, and any lapses are taken care of at the earliest stage. If you see now those are the basic duties. On the liability side, the directors are liable for anything that they've done which is against the company's interest. Now, in this case, you'll wonder, is the director individually or jointly liable? Now, often we've seen many resolutions that are passed, which have been passed because of one or two directors, but the others were complicit. One of the cases, the DHFL, the Vadvas, all of those were where the directors have given funds. 2-3 directors were not aware of it. That's what they claimed. 1 or 2 said we never ratified it. But at the end of the day, did you resign? Did you say no? Did you note your saying no to the resolution? If you did not do all of those acts, you are responsible. The recent cases, those scams that happened, HDL scam, all of them showed that the directors, even though some of them had said no to the deal or did not authorize the deal, all of them became equally liable. Why? Because they're jointly and collectively liable. So this is very important to notice that today in the Companies Act era, you cannot claim that you said no or you put your hands up. If you want to report it and step up, which is why many directors are now resigning. Now, when a director resigns, it's a big deal. So it's like an auto resignation. They will question, they'll wonder, they'll then inquire. Abhi Yes Bank, there were some resignations in the last 12 months. 2 directors of Yes Bank resigned, send a wrong signal. But obviously it means that they are not able to they're not able to work within the corporate governance framework, or maybe they feel their decisions are not being valued. Either ways, they become collectively liable. Clear? Directors who don't fail, who don't make disclosures under the SEBI will also face actions. Now, SEBI action is another very big part. Obviously, SEBI will firstly action against you both on monetary matters and also in criminal. So that becomes a big part of it, and they'll charge the profits you made. Apart from that, if you refund any share money in excess of fees, you have to pay for your qualifying fees. And lastly, any civil liabilities for misrepresentation of prospectus. So while these are a little fair, these are all the liabilities that they will face for any wrong actions. Apart from that, there's also tax liability, where if they do not pay any taxes due to gross negligence, then they will be asked, they will be proceeded against for the payment. Clear? So we looked at duties under section 166 and we finished the liability part. And now we'll come to the more interesting part, the last final part of this, which is the criminal liabilities. Now, obviously, criminal liabilities are something which obviously directors probably say, no, we will not be, but that's a wrong notion. They can be proceeded against criminally as well under some of the sections of the various acts. The most popular one, which you are already aware, is the Negotiable Instruments Act. Any bounce check which is not honored due to insufficient funds is actually a criminal liability. I mean, this is on individual front as well. But if a director has signed on it and is bounced, then he can be proceeded against criminally. This is obviously under the NI Act, which is quite popular and which gives results within 6 months. Apart from that, you also have liability. He has criminal liabilities under Income Tax Act, under EPF, Provident Fund Act, and the Factories Act. Clear? But those may take time in court, but there are criminal liabilities. Any other derivative action by one or more shareholders of a company can also be taken up criminally in the court against the director. You obviously are already aware that any violation of the Memorandum of Association articles can be proceeded against in a criminal manner by a section of shareholders who bring criminal action. Obviously, this is for those acts which are criminally liable for specific actions. And obviously, any fraud done by the company's directors on minority or any section can invite criminal action. Clear? Now, obviously, if a director is criminally liable and is found guilty, he'll have to pay money. So it's important that you take insurance policy against such action as well. So today you'll see there's a lot of indemnity insurance and other insurance. Like in my committee, in my society, we have an insurance policy so that if the treasurer or other person gets a fraud, then they'll be compensated. So same way, every company today should try to ensure, it's not mandatory, but they should they should have a policy in place to mitigate, to ensure that they're indemnified. Clear? So with that, we conclude. So quickly, we have looked at the main increased responsibilities, liabilities, duties. We looked at the ears, the eyes, the organs, and most simply, you touched on what is the added roles that the board is today responsible for, which requires them to ensure that corporate governance is not here, but at the highest ever place possible. And that's critical. And that's something which I think in the audit profession is taking seriously. Today, if you see an audit is starting with a discussion with the board, with the people in the TCWG, with the people at the top, because we have to ensure that while we don't get lost in the vouchers, we have to also look at what is the tone at the top, what is the overall attitude, and what is their responsibilities that they really discharge on, missing out on, which might impact our overall comfort. I hope that makes sense. Briefly open the floor for questions, if any, guys.
Is the statutory auditor is the part of CSR committee?
Sorry?
Is the statutory auditor should be the part of CSR committee?
Statutory audit.
Is there any requirement of this?
I think
Statutory auditor should be the part of the CSR.
Oh, the CSR? No, not at all.
And if he is the part of that committee, so is there any responsibility on the statutory auditor?
In terms of?
In terms of the utilization of the CSR fund?
So there is a reporting requirement. So I'll just come on that. So the CSR, so his question is the CSR, is it a part of the statutory audit requirement and reporting responsibility, right?
What is the liability on statutory auditor, if he is the part of CSR committee, so is he responsible for the
No,
fund
firstly, a
utilization?
statutory cannot be a part of the CSR committee.
If board puts him in the
No,
committee, then
not possible.
not-
It's not possible only. He's not independent, no? So statutory is not an employee of the company or not a special case unless he's not the auditor. Sorry. I'm surprised. That is impossible. It's not against, it's against the law. You cannot be, I mean, I can state that on paper here. You cannot be, because the auditor has to certify that the committee is in place, the committee has the right people, and the committee has spent 2.5% of profits. And they'll certify that how much is not spent. They will tell whether it's not spent correctly. So the auditor will certify all that. So he cannot be a part of the committee at all. It will be a gross violation. If you observe that, please highlight it to the to the board. But yeah, not possible. Not clear. Anything else, guys? Any questions? So obviously, if you want, you can see the slides later. But you'll notice one thing. This is a bit of a dry area. I mean, frankly, I could finish in 15 minutes. Responsibilities, duties, khatam. CA question, 15 marks. We've done this. But what is important to understand, what is the focus? Why are we moving to this regime? Today, with so many frauds, scams, DHFL, HDL, and so much happening, we have to ensure that today the board is accountable. What happened at Yes Bank? Rana Kapoor got imprisoned, his 3 daughters are in jail. All of this would not have happened if we were in an old regime. Today, the accountability is so strong that eventually, like in the Vadwas, everyone, eventually they will be caught. Obviously, Nirav Modi went abroad, so we can't catch him. But the director of that bank got caught, PNB. So every person becomes accountable for what he does as a part of the board, as a part of corporate governance. So today, please ensure you understand that it cannot be taken lightly because the responsibility liabilities have increased almost 5-fold on all the directors of any company. You'll probably think twice before become director yourself. We can become directors as a financial capacity, right? But I would think twice, you know, if company doob gaya to tomorrow, never know. So yeah. So all the best, guys. I'll leave you with that. If any questions. Sure. Thank you very much. Thank you.
Good afternoon, everyone. I feel privileged to provide a vote of thanks to Sir, and he gives us the insightful knowledge about the duties and responsibility of the director and the committee, various committee at the board level. So please give a big round of applause to Sir. Thank you very much, sir.
We'll have a 15-minute tea break, and post tea break, we'll again reassemble. So friends, in the pre-lunch, I was just mentioning about my role at WIRC, and we here have Jyoti. This is one example. She had filled up the form of my role at WIRC, and we instantly, proactively, the dynamic chairman said that let's give one role to Jyoti for being there to handle this session. So related party. In fact, this session was planned tomorrow morning, and like other speaker, the sir is extremely busy, and we had to prepone this session today, and audit trail will be happening tomorrow. Very, very simple once we understand, but at the same time, very complex subject. Me, Chairman sir, we were requesting Himanshu bhai that under your guidance, we can, come out with some small publication on related party transaction so that the members get benefited out of this. The definition, as the title says, is different under different act. The applicability of RPT under Companies Act, under Income Tax Act, under some IND AS accounting standards, everywhere it may minutely differ. And we need to understand where it is applicable and how we'll be doing reporting, and who else better can we have on this topic other than Himanshu sir. Sir, we are thankful to you for sparing your valuable time to the coming over here to the WIRC. I'll request my colleague on dais, Ashish Sudani, to do a formal introduction of Himanshu sir. Of course, sir doesn't need any introduction to the gathering of chartered accountants, but I'll request Himanshu to do this honors.
Thank you, Ketan sir. I myself, Ashish Kumar Sodani. It's my great privilege and proud to introduce our today's speaker, CA Himanshu sir. He is a BCom DCM FCA with rank holder in both inter and final CA. He is a senior partner in CNK and Associates LLP Chartered Accountant. Sir oversees the audit and assurance practice of the firm, particularly audit of large corporates, IND AS implementation, investigation, due diligence, assignment, and conversion of financial statement from IGAAP to IFRS, US GAAP, etc. He was senior lecturer in accountancy and computer system at Narsi Monji College of Commerce and Economics, Mumbai, from June 1986 to November 2000. Sir is a co-author of various books on accountancy and financial management from FYJC to TY BCom at Mumbai University. Sir has delivered lecture at various seminars, conference, presented papers, and written articles for ICI, BCA, CTC, IFSC, etc. on subject of accounting, standard auditing, etc. Sir is a director and member of audit committees of various companies. With this, I welcome him with big round of applause.
I'll request Honorable Chairman of Western India Regional Council, CA Arpit Kabraji, and Saurabh Ajmera, Secretary WIRC, to welcome sir with the memento as a mark of our love and affection. Sir, dais is yours.
So, right, good afternoon to all of you. The chairman of WIRC, the various other office bearers and council members of WIRC, all my friends and colleagues who are present here. It's a pleasure to be here. I mean, the physical meetings have not been happening since a long time. It's a pleasure to be here to discuss an important topic with all of you. And again, with this busy season, I'm sure a lot of you may be busy with bank audits also. And in this busy season, having so many people physical as well as, I believe there are a lot of people who are there online also. So it's nice that you are all interested in a session on this related party transactions. Now, related party transactions is a topic which is a very vast topic, if you ask me, because you must be reading in the press off and on that the regulators do try and penalize companies where they find there are related party transactions and adequate disclosures not made. There are provisions under almost any statute you look at where related party transactions are flagged off, and they want that related party transactions are at arm's length, they are reported, and so on and so forth. And it is a human nature that when you have a related party transaction, you may like to favor someone. So it's a human nature by itself, which of course our regulators are trying to say that yes, there could be related party transactions, but follow a process, follow an arm's length, and do adequate disclosure of it. So these are really the three things which everyone is concerned about. First is identifying related parties, and today a lot of business houses go at lot of length to see that though they are otherwise related, they don't fall under the realm of related parties. And you must be reading in the press one of the big groups where so-called family members are involved, but they are not considered related parties. So the first thing which regulators want is how do you identify related parties, and there should be transparency and regulations around it. Second is having identified related parties, what are the transactions with related parties? So that's the second step. The second step will never come till you have the first step. And the third is how do you disclose all these things? Whether you disclose in a summary form, whether you disclose in an aggregate form, how do you disclose these three things? So when you talk about related parties, everyone wants these three things to be transparent: identification of related parties, identifying related party transactions, and finally disclosure of related party transactions. And all the acts and the regulations which are there are centered around mainly these three things which are there. And here when the topic which was given was RPT under Companies Act vis-à-vis 18 and 24 and other acts. Now, and other acts is a very broad thing, and which is what we are trying to discuss here. So we are talking about Companies Act, we are talking about AS 18 or IND AS 24, depending on your following which accounting standard. In addition to that, when the topic said and other acts, there are at least 4 other acts which are going to deal with related parties. You have got the SEBI LODR, which is going to be applied only to listed entities. We have got the Income Tax Act, which also talks and wants you to deal with related parties. We have got the Reserve Bank of India Act, which also talks of related parties. And you also have your GST or CGST Act, which also talks about related parties. So we are going to and try and cover almost all of these acts which are there from a related party perspective. Of course, the focus will be on the first two things, which is Companies Act and the accounting standards and maybe SEBI. But we are also going to cover the other three things as to what do they deal on related parties per se. So which are the statutes which really apply to you? And this is a listing down of the various sections of the various acts which we saw earlier where related party transactions would be covered. So in the Companies Act, CA 2013 is the Companies Act 2013. So you have got section 177, 188 and schedule 3, which talks of related parties. And they really try to cover selling, purchase or supply of goods, selling or otherwise disposing property, leasing, services, appointing any agents, underwriting commission, and RP's appointment to any office or place of profit in the company, subsidiary or associate. Say you have managing directors, you have their relatives or appointed to a place of profit. So the Companies Act covers all these things as related party transaction. And these are the sections which talk about related parties in the Companies Act. When you come to AS 18, there are paragraphs, and AS 18 is on related party. And it really talks about transfer of resources or obligations between related parties, regardless of whether a price is charged or not. That is AS 18. When you go to IND AS 24, it's a little broader definition because it follows IFRS 24, which is there, IAS 24, which is there. So it's a transfer of resources, services, or obligations between a reporting entity and a related party, regardless of whether his price is charged. And here, when it comes to IND AS 24, it really talks about on a consolidated level, doesn't necessarily talk only about your standalone entity which you are reporting on. SEBI LODR, a very similar definition, which is there as per accounting standard. There are a lot of amendments which are applicable in SEBI only from this particular year, 22-23. But it's transfer of resources, services, obligations between a listed entity. Instead of any reporting entity, it covers only listed entities. SEBI applies only to listed entities and a related party, regardless of whether a price is charged. When you talk about the Reserve Bank of India Act, they are going to refer related parties to only the disclosures which are given as per AS 18 or IND AS 24. And thankfully, RBI doesn't have its own definitions. It says whatever is there in AS 18 or in AS 24, please follow that when you talk about related parties. When you come to your Income Tax Act, it really talks about any expenditure incurred to a person defined under proviso of this section 48(2)(b), which is payment to related parties in that sense. And that, you know, is something which we even report under a tax audit, that any payments which you make to related parties, the Income Tax Act wants to find out whether it is an arm's length, whether you are trying to avoid taxes by transferring some profits to the other entity, whether your remuneration, rent, or whatever you pay is reasonable or not reasonable, and so on. So in Income Tax Act, you have got this 48(2)(b). You also have in Income Tax Act this section 92(b), which is on an international transaction where transfer pricing would apply. And you also have 95(ba), which talks about domestic transactions where transfer pricing would apply. So in Income Tax Act, you have all these three particular sections which really talk about related party and related party transactions. Now, in the Income Tax Act, they don't use the word related party anywhere. They use the word associate enterprise. So if you are an associate enterprise and your section 92(b) or 92(ba) applies to you, then all the arm's length validation and all will get triggered when you do a transfer pricing study, when you give a transfer pricing report, all that will get triggered. For domestic transfer pricing, you of course have a threshold of that 20 crores, which is there. And it is also if it is from to a say tax-free zone, which is in India or something. But in Income Tax Act, you have got these three things where you are going to deal with related parties. And finally, you have this CGST Act, where it is said that as per Rule 28, you have to derive some values, and there is a section which says activities are treated as supply even if made without consideration. So supply of goods or services or both between related persons or between distinct persons as specified in section 25 when made in the course or furtherance of business, or import of services by a person from a related person or from any of his or establishment outside India in the course of furtherance of business. So if you supply goods or services to a related person, or if they are distinct persons, but they are covered as related as per that section 25 of CGST, then you will trigger this valuation rules as per Rule 28 of the CGST rules. And this is something which I believe a lot of people are still not applying in practice, and notices are being issued now where the department finds that you have got related party sale of goods or services and nothing is being charged for it. And in the CGST perspective, to give you a simple example,